Hey.
Yeah, just look at that giant.
I think you are. This is your show.
Okay, well, I will call the meeting of the Administration and Finance Committee meeting to order. It's 1:30. Friday, May 12th. All members are present. Nobody from the public. So we're off. The first item on the agenda is audit proposal recommendation. Jeff, or-
Sure, we can kick this off. Well, one, I want to thank all of you for taking the time to review all 5 proposals and provide scoring for them. You're to be commended for that. One, we're really happy that we got a number of proposals to look at, and it appears that any or all of them probably capable of doing this work for us. So we were happy to receive that many. We did provide for you yesterday morning, I believe, a summary of all of the scoring. Natalie and I scored ours independently, and those are depicted in blue on this larger sheet, and then the committee member scores are depicted in green. And then you can see the total score for each person for each of the proposals. And then we average scores for staff, and we average scores for committee members, and then we provided like a combined average on this table as well, just for your information. I think we can go about this, one of the several ways. We could, if there's value in discussing, how each member went about scoring it, we could talk about that. Or, maybe you could narrow this down quickly, and we could focus on what are the top couple of firms, however the committee would like to go about it. There's not great consistency necessarily in the scoring. They're kind of all over the place. Like, for example, the first one listed, not number one, but the first one listed, E.D. Payne, we've got scores ranging from 97 all the way down to 50. The second one down, Mays, we've got scores ranging from 91 to 75. Third one, Moss Levy, 99 to 75. Nigro, 97 to 55. And the Pun Group, 91 to 66. So, quite a variety. And there is I don't know that there's a ton we can take away from just looking at the raw numbers. Although there are, when you look at the averages, there are a couple that did, better than others. Maybe the first, looking at them, the first and the last have, generally lower scores, generally lower averages. Maybe those could be removed and focus on the others, or perhaps you could focus on just the top. You look at the average. Moss Levy and Nigro, totally up to the committee about how you want to go about it.
Well, I think the scoring, there were 5 categories that we looked at. And I think in terms of the ranking, the possible points were identified, but how those points would be applied, there was no description on how to apply that. So I think that was completely discretionary on each of our evaluation of the clients that responded to the RFP. But I kind of also made some additional comments that are not reflected on the evaluation form. And that being that Payne, the first client, I looked at also as where are they based? The first client is based Southern California. And so most of their clients were also in Southern California. Then I looked at Mays and Associates, and their client base was Northern California. And also I think based in Northern Cal as well. Moss Levy and Hertzheim their office is in Santa Maria with several of the professionals that would be assigned to this project. I believe all of them were Cal Poly San Luis Obispo alumni. They also,
Before you go on, and also on that one, I noticed they had more CSDs that were really CSDs than any of the other.
well, they also, their two clients that jumped out to me was Templeton USD and the city of Atascadero. And they're also, they were the lowest, second lowest cost compared to the others. Nigro and Nigro, they, let's see, hold on. Well, the last one was the most expensive and was based in Southern California, based in Orange County. That one really didn't kind of strike me as, this is somebody who is kind of familiar with TCSDs or CSDs. Nigro and Nigro I put is the lowest cost estimate, but their office was in Marietta and Walnut Creek. So again, not having any, and I don't recall there being any government clients that were CSDs.
Like 7.
Oh, did they? Okay.
I
But-
guess,
But there wasn't anything about them that jumped out that says, oh, this is the one that we should,
so I guess for me, I took the location out of it because it really wasn't one of the criteria on here.
Yeah.
So I was judging strictly by exactly what was on here and not I knew.
well, it was an
that
extra
part-
component that I was using.
Yeah, but I was gonna use it, for me, I was using that more at the end,
Yeah.
like
Yeah.
a discussion item and not necessarily for points, because that wasn't specific to the points. That was for me.
Well, when you look at the first one, the first category is the firm's past experience and performance in comparable government engagements. I ranked it as 35 because they had, all of them had government entities.
For sure.
And, so they're all CPAs. So they've got to be familiar with FASB and GASB and all those accounting rules that go along with it. I couldn't ding them for that because I don't have enough of being able to look at, well, what did their audit report look like? What was the client's feedback on these particular folks? Which I think if we had some client feedback, then I could evaluate.
Well, yeah, and remember, we can,
I know, but-
but it probably doesn't make sense to do so for 5. If
Yeah.
you're gonna narrow it down to a couple, then I think it makes
Yeah.
sense. to put
So
more
that,
input to
that first category, it's like, they all met the criteria of being CPAs.
Yeah, that part was difficult.
yeah, so- Exactly.
I
And
ranked
they
them,
had experience with government agencies. The second category, in terms of the experience of the firm's professional personnel to be assigned to the project, again, they all were CPAs. They all had government experience. So there again, I couldn't say, well, let me subtract points. The third category, the fee for the engagement, well, there I could actually compare to say there are differences between each of these potential audit firms. So that, and I think we all could judge that and rank them on that basis. The planning and schedule, some were better than others in terms of providing a detailed schedule. And also one that I think was realistic. So that could be evaluated fairly. The fifth category, in adherence and clarity to requests for proposals, again, how they responded to each of these categories is how I kind of ranked in terms of who did better than others. So that's kind of how I kind of completed this form. So I don't know if anybody has anything differently that they want to share.
I think I was the one who scored inappropriately the first time,
well, no, it's not.
and that's fine. I was kind of looking at generals. I had like a 1 out of 3 and then appropriately assigned based upon it. And I also failed to do adherence because I believe that they all adhered accordingly. Like there was no deviations from that. I did score according to cost. And I did in some sense have a weight, and that's for a discussion later, but the idea of a local organization. I felt in some sense that Payne was the least responsive in a sense. I also felt that the fund was the most responsive, but at the same time, the costs So it was difficult weighing that balance between the two, because regardless of response rate, there has to be a little balance between how much is it going to cost. There was one other one, and I'm sorry if I don't have the reference to it, who marked that each year is going to be the same cost. And that seems unrealistic.
Yeah,
So why don't we come to, I don't know, if we want to pick 3 of them or 2 of them and then go from there. If we,
Yeah, it sort of depends. I mean, I think all of us probably had a little different approach on how we attack each points, but I was pretty literal when for each category. You know, if you look at the cumulative average, you know, Moss Levy and Nigro are the 2 highest, and then the third one is Mays. Again, the number 1 and number 5 have the lowest scores in the 70s when they're all added up. I don't know if you want to try to narrow this down so that we're just talking about maybe you know, taking a step further on a smaller number of these proposers. Again, I don't have any reason to believe that any of them couldn't do the work. I think they were all responsive.
Yeah. Yeah. So I think we should just throw out the Payne and Pun group, since those 2 just rank the lowest in terms of average.
okay,
Time for that.
Okay.
I'll buy that.
And then you have the Mays, Moss, Levy, and Nigro groups. And I think that, you know, it's pretty close to everything.
Maze was actually my lowest.
Mace was,
Why?
So when they scored low, they were second to the highest for
Price.
price wise. The planning schedule, they didn't really provide a schedule at all. Made me think that they really didn't even look at it, because they just said, we will adhere to whatever you want to do. So I scored them low on that. And then the other part of their work said that most of their work would be done way in advance of our closing fiscal year. Now, one, that wasn't anything that I had talked about in the RFP. And so I was like, well, you're not really adhering to what we were asking for. So I scored them low on that as well.
and then Eric, it looks like Nigro, you scored them lowest with 55 points.
There were certain discrepancies in when I look at past experiences. And it's not to say that they weren't experienced with it, but some of the references that they had made had been from small organizations or outside organizations or agriculture on that side. So I had basically said, okay. One of the parts of my scoring was I didn't want to give everyone numbers, so that did fall in a hierarchy, and I chose top down.
Ranking
So
them.
even though they score well inherently, they might have fallen below another.
So when I looked at both the firm and the individuals, I was looking for similar organizations served in both the firm and the individuals, and really I discounted to a significant extent CSDs. We are not like most CSDs. We have both governmental funds and enterprise funds. Most CSDs do not have any governmental funds. Only CSDs that have governmental services like fire and Parks and Recreation have that. So like looking at our neighboring communities, they're not like us. We're much more like a small city. We're much more like Morro Bay than we are Napomo CSD because we have governmental services. So from when you look at accounting, there are 2 different accounting standards that are used. The governmental funds are treated as independent operations from business type funds or enterprise funds. So I was looking, those were the things that I valued were, and it could be CSDs, but not necessarily single purpose special districts. Because in almost all cases, those are business type districts only or enterprise fund activities only.
Well, single purpose only means they're looking at one thing.
One
They
activity.
hire them to
Yeah.
go in.
Fire protection.
So
Yeah,
it's-
water
so
district,
maybe-
fire protection district, wastewater district.
Well, I
like
think
type
you're,
of thing.
you're raising a good point about the government funds versus enterprise funds.
So that's how I kind of looked at the first two categories in my case, which is maybe why, mine were a little differently. I didn't, until Natalie had mentioned the fact that they wanted to do a lot of, one of the groups wanted to do a lot of work ahead of time. I didn't discount them for that. It isn't in our RFP and I can see why it would add some stress. We do a lot of that now, though. I mean, up until now with our prior, leaf and pole.
Well, but I'm doing it after the year end. I mean, yes, there's a lot of work done to provide it to them before they're
Field
out
work.
here. But it's not in March and April when I'm working on budget. So I really took that into account. And then I also noted that Moss Levy, although they're my second highest, they had proposed 6 field days out here at the office, which seems high. Now, did we don't want to talk about any of the like, email?
So Natalie has some information that the rest of us really didn't get involved with, because she dealt with all the questions. So she has information about questions for clarity from all the different firms, some of which were very thorough in the questions and others that didn't ever ask any.
Yeah.
And then we got some unsolicited, like, hey, if this group, if this group bids, you may want to look into something. I didn't factor any of that in, but I
And
didn't
I
even
didn't.
look at their notes because I didn't want to influence, I wanted it based on just the proposals.
Mhm.
So Natalie we have that information available to you if you want to take it into consideration. It was not part of what was scored, and it wasn't shared with all of us who did the score.
I think it would be worth hearing.
Okay, so I would say that like Maze and Nigro and Nigro asked the most questions. They were very thorough. Moss Levy, he called, he asked 2 questions, that was all. But I did get an odd email regarding Moss Levy. And
An odd email.
at first,
Okay, that's kind of scary.
I thought it was phishing at first, and in fact, maybe I deleted it. You have to realize that I had just been hacked at home, so I wasn't trusting any
Oh.
emails that I got. It just says that they were tipped off from one of their associates that Moss Levy had issues with its peer reviews, and it is in the AICPA's list of bad firms. Keep an eye on it. Keep an eye if they submit for audit services.
Oh,
Is that identified as being correct?
So I did go through, and if you'll notice, a lot of the proposals will put in there that
The peer
they
review.
got a pass on their AICPA. I looked at all of them. I can find a pass for all of them except for Moss Levy. So it might be something that we would want to
That's-
call them
That's-
and
that's-
ask them
Yeah, I definitely,
if they could provide it.
Or
I could call the
But
AICPA.
if I look on
Yeah.
the site, I cannot pull it up.
So I
There's
think that would be
nothing
an
there.
inquiry to basically,
AICPA,
Yeah,
ask them.
Is there a?
there's a website that I went to, and you can pull up everybody's. I pulled up everybody's and it says pass on it. And on
Except for
theirs,
Moss Levy.
it doesn't say pass.
well, that's a concern.
Although they are doing local,
Yeah, they're doing the local work,
So-
but then maybe local work isn't being
So
thorough.
my other comment, I guess, would be, is that they were our auditors prior to,
there's some history.
there's some history.
Oh, really?
We did let them go, we let them out of their contract early.
For what reason?
The board didn't care for their work.
And what does that mean now?
That, I'm just going back from minute notes.
But,
She started
Alright, was there a specific,
That's all it
Deficiency
said.
or
It
issue?
didn't say.
it didn't say, they
It
just
didn't
weren't
say.
happy.
So, yeah, it just says, yeah, they weren't,
It would be
Weren't
helpful
happy.
to have exactly
but
what the deficiency was instead of,
just going through minutes,
Yeah.
that's all I've got. I mean,
Wait.
it's been a long time ago.
yeah.
The only other question that I would say about their audit proposal, like, once I got that email, I was like, okay, I'll look at it. I mean, a little bit closer.
Yeah.
So like under their license to practice in California, they have their license number. Well, that license number was canceled a long time ago. Granted,
Oh.
they've got a new one. But they.
Oh, but
didn't-
they put that in
But
the,
they've got, they don't have it in. They
haven't
didn't put it-
updated.
They haven't updated it.
the proposal.
Then, I'm kind of looking at like, okay, on the last.
So that's a little sloppy.
So I guess that's what I was saying, like, in appendix C, they have current and or recently completed government audits. Well, they have us listed there. Well, that was 13 years ago. So.
Okay, their points are going down.
I mean, they were second on my list,
like the
so
same
I,
year.
I ranked them high.
And I believe that's,
But as I started kind of
Digging
digging
a little
more,
deeper,
I was kind of.
and I did not dig into each one that much.
Yeah.
So I appreciate that information. I think that weighs heavily against them.
Yeah, it does in my books, because not including the current license number and having the old one, that's just sloppy. And, some of these proposals are templates and they're just going.
Right,
in
because
and-
I found something on someone else too, they had the wrong, like, under the independent.
Yeah, there was.
Well, yeah, you can
They
tell
had
they're templates.
Right,
that they're
and I-
using,
and I
they're
get that.
just editing it for the particular client. But nonetheless, you really, I mean, your license number, that's kind of saying, we moved and we forgot to put our new address in.
And it wasn't like,
mean, that's-
just like 10 or 12 years
Yeah,
ago. It
yeah.
was-
Well, yeah, so, and the fact that there's no peer review, so that really changes things for me too.
Well, you don't know there's no peer review.
Right,
So I'm trying
Well-
to.
That's right.
If she can't find it online,
Well, that
but
And
you
they
can
didn't
still,
include it.
but I would say is maybe call them and ask them
we're
to
not talking
get their
about.
pass letter for their last peer review.
Yeah.
Ask them for it.
Yeah,
Yeah, some of them provided it, like.
Well, and I
just
logged
included.
in and I double checked, yeah.
I'm just trying to figure out where it would be a credit.
I did it like a week and a half ago, I can't remember. I think I looked up like peer review letters or something. But
so anything else from Maze, in terms of questions or
no,
feedback on them?
well, they asked questions, yeah, I was pretty, when Jeff says little, I was pretty literal when I was doing experience of firms too, because I was like. Taking their top 3 people that were gonna be working on it and how many years experience they had. And. Coming up with my points that way as well. So, but Maze mostly got dinged for their fee, being one of the costs being one of the highest.
Mhm.
Not providing a schedule and, most of the work being done at, before June 30th. That's where most of their points came off for me.
So in terms of Nigro, it was, just a lot of questions that they asked.
Yeah, they asked about 26 or
That's
27 good questions, like who would be performing, the journal entries for Gatsby.
Yeah.
Yeah,
Okay.
and I liked that he, gave an example of their work
Mhm.
as well, so. Any more thoughts, Jeff?
I had Nigro rated highest. Now, I gave them full points for the. The way I ranked the dollars was I added up 5 years worth. I added all 5 years together.
Mhm.
Just hoping that we're gonna get at least a 5-year term out of this. And then ranked them accordingly. They had the lowest cost over the 5 years. Now, it is odd that their prices didn't go up every year, but But maybe they think they're gonna be more efficient as time goes by, and there should be some efficiency gains. They should, once they get our stuff in their system, the first year, the second year will be a little less work,
Well,
et cetera.
some firms also go with, they just want the business. So
Correct.
they will just go in with the lowest and then, and I'm speaking from healthcare. We would go to CalPERS and say, oh, let's lowball it.
Right, and hopefully.
And we'll get it and we'll have the contract for a year. And, hopefully we can then beat out the competition and everyone would do that. And it's a numbers game. It's like, just try and get the business. So they've got to know that they're up against other people.
Sure,
So, so I don't know that it's a bad reflection on them. It's more of a strategy in terms of how to secure the business.
yeah, anyways, I didn't give Nigro full points for the firm's prior performance I gave. Well, prior performance was really, Maze was my highest one for those first two categories.
Mhm.
Again, I was looking for like organizations, similar organizations. Lots of services, small population.
Yeah,
That's what we are.
yeah.
So I would say, like, on my understanding, one of the reasons for it being narrow is that they do a lot within water districts.
Mhm.
And that may be my mistake and awarding points for them. And that idea is if we do look at that, plus the additional of Parks and Rec and others, is if they can provide that service, because as far as water authorities are concerned, they're fully covered in their history. And that is a positive for us since we are our own unique CSD.
But I didn't see, include in my scoring, I didn't find any that couldn't do it. It was odd to me that I thought we had two that were very price competitive. A third outlier and then two that were very expensive, that was notable. I couldn't see us paying 50% more over 5 years for
Yeah.
the same
Well,
work.
we
It's not the same work, but same product.
So do we want to take another slice of saying of these three, which ones, because I'm thinking if Maze is the highest,
Of the three that remain, Maze is the highest cost.
so maybe we pull them out.
Well, I'm tempted to fake Moss to be pulled out unless they can provide.
Well, that,
Well, I
that
don't-
would leave us with Nigro and Nigro.
Yes, correct.
I think we should go with 3 until we find out what the AICPA,
Okay,
and if that is true, then we take them off and we go with the 2.
Well,
Send the 2 to the
Well,
board.
should we eliminate a third one?
Or to eliminate Maze on costs.
Yeah,
Ideally, we'd have one recommendation to the board.
yeah.
We can keep 2 alive right now, and then you could say, hey, okay, our recommendation is this, if they can provide this, this, and this, or it's this,
Yeah,
if they
so
cannot, or
If we
what.
wipe out Maze and then say, okay, well, Moss and Nigro are still in it,
Right.
but Moss has to provide that peer review.
Yeah,
And if no
Absolutely.
peer review, then it's Nigro.
And maybe some more information on why they were dropped. If that's available.
I've got the minutes and it doesn't say.
Yeah, this
Yeah.
was like, it
Two
was,
thousand and eight.
it's.
So,
They weren't
it was
happy.
long.
We're not happy.
And it may not be, it may be something that we, because if I did the same thing now, I'd be very cagey about, because we don't want to be in a situation where you're viewed as doing damage to an organization, to
Well,
that
it's two
accounting
thousand
firm
and eight, that's a long time
15
ago,
years ago.
but not knowing, to say, oh, we weren't happy, that's not descriptive enough. I think there has to be something to say, what was it
And
that
maybe-
went wrong?
Maybe there's a follow-up within both
You mean
sides.
here?
So the AICP is one, which you reach out to and identify what the peer review is. And the second one is to directly ask Moss, you previously were.
But I don't think they would know, they may not know.
All these parties have changed, right? All the
Yeah, I
people
mean,
that are,
So, and I don't think that's really relative, I think because if the peer review is gone, I think it's gone.
Okay.
They're out then. But if they've got the peer review and, it's just, was not
Yes.
provided. But it has to be a current peer review.
Passing.
and what,
Yeah, passing.
well,
Passing
Yeah,
peer review.
passing. Keyword.
I'd be interested in what this does. Seeing as I came from that area and I know about peer reviews, and I actually did them for a while when I retired for pension funds, so.
Well, so we can go about this one of two ways. Either you can give us sufficient direction that we could do the additional work and then carry this forward to the board. Or we can do some work and come back to this committee, but it would require another committee meeting to accomplish that. And maybe it's gonna be, you know, if they don't have the peer review, maybe it's easy. Maybe.
It makes
that's-
sense. If
I think
it,
that's the easiest aspect.
Yeah.
so if we take Maze, because they're the highest cost, if we just take them out and we're down to two. And the two is basically, the one has to provide a passing peer review. If no passing peer review, then the recommendation to the board is NIGO.
Okay, if they have a passing peer review, one of the other options we put in the RFP is we could hold interviews with we could do that, we could do reference checks and interviews
Yeah.
with both of them. Would the committee want to be involved in that? So you can make, I mean, would you want another committee meeting over the next couple, let's say Moss Levy has a passing peer review and this is just a little hiccup. Would you then want to do interviews that, you know, they could be in person or we would have to be in person, but they could be over Zoom or in person. And reference checks on those top two before making a recommendation to the board? Or would you want to take this to the board and let them, you know, I don't see how the board's gonna come up with a different answer if we can't come up with a concrete.
Well, it would be good to do some type, I mean, cause I've been on the receiving end of different, you know, cities or whatever asking me, you know.
Right.
How Leaf and Cole is to work with or whatever.
Sure.
I mean, it would be good, you know, maybe before taking it to
To
the
get some
board.
rec-
No, no, I think we should for,
Yeah.
so let's just say Moss Levy has no peer review. Then I think staff does the reference checking on Nigro,
Gotcha, okay.
and we can move that forward. But if there's still two in play, if Moss Levy has the peer review, what are the tools do you want to have?
Then I think it's the references.
Let's go back to what you just said. If they don't have a peer review, to me, means, okay, they're late in having somebody come do it. If they have a peer review and don't pass it, is what I'm interested in,
You're done. Yeah.
then I'm done.
Well, I think we need a passing peer review.
To keep them in the mix.
To keep
Keep them in the mix,
But I also think,
otherwise,
I think three, like last year's, if they've had organizations that they have contracts with in the last 3 years that can provide a reference,
Yeah,
then
and they,
that,
and they do have it, I mean, everybody, that was one of the criteria was to
yes.
include 3 references.
They referenced a lot of stuff that may have been out of date. They say it's
Well,
current.
that is true.
Yeah, I'd like to
That's-
reach out to the city of Tuscadero and Templeton Unified.
Yeah, oh, yeah.
And, you know, cause it's, but what we see, I don't know, all of them have all kinds of lists of clients, right? It jumped out to us that they listed Templeton CSD, even though it's been 15 years. That doesn't seem like a recent client to me.
No,
And it wasn't, it ended prematurely. So would have been one that I would have left off if I were them.
well, I think they're probably using that to say, hey, because we could have had the turnover in staff.
Sure,
So
we
they're
have,
kind of
right?
saying, hey, we once were there, we're familiar with you. So I think that's why they included it.
But if the Tascadero and Templeton High School
If they're not
are both
using it.
like 15 years before too, it's like, wow, why are we including all this?
Right.
Exactly.
so that's why I kind of asking about like the last 3 years. Can you provide references? that
Yeah,
those-
we have other ones that they provided.
Having been on a few boards for the high school, if they say they're okay, they are super when it comes to their financials. They're nobody better than Aaron, nobody. And so I really, no, I can know what he says.
Yeah, I have no idea how recently they performed work for them.
Who sent that email, by the way? asked
I don't know. I mean, there's you
She
know,
deleted it, like, yeah.
Well, like, yeah, I took a picture of it with my phone and deleted it and I was like, I mean, Easter had been a bad day for me for getting my stuff hacked. It's just a Yahoo
Account,
account.
that's interesting,
It was bizarre.
yeah. A disgruntled employee.
Yeah.
It's, I mean, it's
I
possible.
mean, I have no idea,
Yeah. That was-
Yeah.
but it made me look.
So,
Who's going to be moving to one of these other firms?
I guess I also would like to know, if you're looking at this, the AICPA peer review, is that best practices or is that mandatory?
Okay.
Uh,
So, okay, if they have it, does this committee want to do, if we have two in the mix going forward? Because Moss Levy has the peer review. Do you want to interview them and be involved in, interview them and NIGRO? Or do you want staff to make a recommendation based on those two, based on what we find?
I
It'd be
don't,
my recommendation to let staff go ahead and do this.
Yes.
You guys are the ones that have to work with them. You guys, I mean, we don't. I mean, I might like this person, but they're gonna be, anyways. I think if Moss Levy passes and gets to that level, and there's two, then you guys go ahead and do what you want, you know.
Okay, and we'll
Interviews.
report that the committee narrowed it down to two
Right.
based on this other criteria, and then we did this and this and this.
Yep,
and we
yep.
moved forward. Okay, we're good with that. I think one of the, just not to, one of the things that made Natalie nervous was Moss Levy's insistence on having, or recommend, stating to be here 6 days. And that we've been used to having Leaf and Cole here for like a day and a half. When the auditors are doing field work, it's very distracting. Nothing else happens
Yeah.
amongst the accounting staff, because you're just running around grabbing files and trying to solve things for those folks. You know, that wasn't alarming to me, but everybody else was saying, hey, almost everything we're gonna do remotely. And we've become very used to doing that with Leaf and Cole. Their field work here is just sort of buttoning things up. It's an opportunity to meet in person with the committee and kind of wrapping things up. There's very few new inquiries that take place during the field work. Now, that's not the way things used to happen 25 years ago. You know, they'd park in here for, weeks, and all the work would be done here. But it doesn't, these days you scan stuff and send it, and they come in with the financials halfway done or more.
So the clarification, if they enroll inside of AICPA, then they are per se required. Like, so a part of enrolling in AICPA, then they will have a peer review.
And they are enrolled,
Mhm.
because
So-
I looked them
So
up,
they are enrolled.
they are enrolled, I looked them up, but it does not give them. Like, it doesn't give you access. The others, you can click on the peer review letter and it says pass,
But they don't have that on
but
theirs.
they don't have that. So I would need more information.
Yeah, and I think that's directly related to the AICPA. So if you, sorry, it's more work for you. But to reach out and qualify, did they even attempt for a peer review? Did they do a submittal for one? Did they get denied? And those standards would definitely
What are the
sway.
records?
Mhm.
In fact, we can start with contacting AICPA directly first.
And see what
Well,
they
that's
say.
kind of the linchpin.
Yeah.
Is that passing of the peer review.
Yeah, I think it wouldn't have been, had this email not come up, it probably would have been something that we could have looked at or not, or whatever, but it's like how do you ignore that information?
It's a rabbit hole.
In this day and age?
Well, and like
Easy.
three, I would say at least 3 of these, I remember, included their pass letters with the app.
Yes.
Mhm.
Yeah, so.
It must be, it's just part of their business practice to do so.
That's business operations.
If you ever have to do it again, you have to remember that. Ask for the letter.
Well, I looked at so many RFPs, nobody said anything. I was like, wait, what's that?
I think
Learn
we've
something
got
new.
some direction from the
Yeah,
community. So it sounds like we'll be bringing, so all of this information will go to the, right, we'll include all the proposals, the scores, everything. Right. So we'll have
Okay, thank you. Thanks, Eric, for being part of this and.
It's a fun night reviewing
Using your
RFPs.
valuable time to go through all of this stuff. Yeah, we get the big bucks to do it. so.
Yeah, we got it for free.
Okay, the next item on the agenda is the banking service update.
Yeah, so we just want to provide just a verbal update on some new services that we've recently enrolled in. Natalie, why don't you go ahead and just describe those?
So our first one is Positive Pay. It actually went live this morning. So it's where any checks that the district writes gets uploaded into Mechanics Bank system. So it'll say it'll be the check number, the payee amount, the written amount. And so any check that's cashed has to match up exactly with what we upload. Otherwise, it doesn't get paid. And that's to cut back on potential fraud.
So these are checks that you receive here in the office?
That
No,
we write.
that we pay.
write.
Oh, that
accounts
you
payable.
pay,
That we
oh,
pay.
okay,
Payable
Yeah.
and payroll checks.
okay, okay.
So any-
So like when you get a
Yeah,
check.
yeah,
or a
yeah,
letter, you
I
can't-
know what.
Right, yeah.
This is it's a best practice. It's not a new technology. It's been around a long time. We've never had a history of check fraud, but when
But it
it
happens.
happens,
Yeah,
I heard of a local agency that did have something happen, and so, anyways, I was like, I'd been thinking about it for a while. I actually thought it was gonna be more difficult than it actually was. It was super simple. And, but we also get, credit from SDRMA for our insurance for
oh,
having
good.
it. So,
there's a small cost associated with it. Each time you interface with the bank, you
Yeah.
pay, rather banks don't make money off your money anymore. They make money off services, and this is one of them. But keep in mind, what most people probably don't realize is nobody at the bank is checking signatures on checks or anything like that, right? So.
But is this, you're basically saying it's a digital two-factor.
Yes.
Yeah,
So
right.
the thing that the check that was issued is matched up to an issue of the bank was actually.
Right, the amount.
Yes.
and if it doesn't match, we get an email each morning saying everything's cleared. If it hasn't, it'll say you have one exception, so then we have to log in, look what the exception is, and then we have to either say, yes, go ahead and pay it, or no. It's,
Yeah, so it's a good tool.
so that was one, and then the second one, we got the scanner, but we haven't set up the software yet. Instead of taking all of our checks that we receive from customers to the bank, we're gonna start scanning them
Scanning 'em.
in to the bank. So we're in the process of setting that up as well.
And again, this probably is less of a benefit to the district itself and more of a benefit to some of our customers. We typically are transporting checks to the bank 1 or 2 times a week. We post the payments and then they build up for a few days and then we take it to the bank. And then the bank doesn't deposit until the next business day. So we have customers that will call saying, well, I mailed my payment in a week ago and it still hasn't cleared the bank. I'm just making sure you got it. So this will speed that up and eliminate some of those concerns. It also reduces some risk of loss
Mhm.
here. It's a little bit more work on our end, but it will speed it up. It does have a cost every time you process the payment remotely, even though we're doing this on behalf of the bank, essentially. There is an additional cost of processing that payment, but it's pretty small. And we think it'll provide a better service to the customers. It
Is it
might eliminate some of those.
Equitable for person hours to go to the bank to actually make deposit.
Doesn't,
Maybe,
yeah.
I don't know. I usually I run into the bank half the time and
Yeah, it doesn't take too much
it's
time.
pretty
It just,
quick.
the auditors really don't like to see a lag time from when you
I was
receive
gonna
that.
say, I
And-
remember seeing them in the.
Back in the day, we used to have a courier that came and picked it up every day. And then, once that went away, and then it was like, okay, let's go, a couple times a week. What happens though is if you drop it in the Dropbox on a Friday, it doesn't go in until Monday. And so they do look at when we get checks in to when we deposit them to when they hit people's accounts. So we'll cut back on that too.
It sounds like it's much more efficient.
Yeah.
It's a best practice. I mean, I
Yeah,
think it's gonna improve some customer confidence in that, those of you that are watching your banking stuff daily. And looking for when they clear and, yeah, I mean, we probably get a call like that every day or two. Every few days. I mean, I
Well,
hear
I've
Andrew
had
answer.
checks that I've written for Park and Rec where it's like it's taken a couple weeks.
And sometimes, see, that's, I didn't really think about that too, but like if you've got something for the rec department, she's got it over there. I don't know how long it's taking her to bring it over to here.
Yeah.
So then for us.
Then
and
the same thing happens to me too.
So will they be scanning? Can they be scanning over there as well?
No, they'll pass.
They'll have to come here.
Yeah, right now we have one scanner, but we'll put the software on a couple of different computers. So,
There's a one-time cost for the equipment and then there's a processing cost.
Yeah.
So.
Okay.
but we'll make up some of it with
Well,
positive
they could be
pay.
hanging on to those checks too, thinking, oh, well, they're not gonna be going tomorrow or today.
Yeah,
So I can wait to bring them over. So.
Yeah, they don't know
hopefully
when to
doing
go necessarily because it's just like, I'll inquire, I'm going that way. So, do you have
Yeah.
anything? No, we went yesterday. So it's based on how full the envelope gets or something.
Or cash or.
Yeah, there's cash.
It'll just be procedural, in the sense of, like, now that they can scan them in.
Yeah.
Part of the
There may be an
procedural.
incentive to say, hey, well, let me
Yeah,
just
every
take
day.
this check. So-
Yeah, and there'll still be times where we have to go to the bank. I mean, we have a daily limit. Like yesterday, we got our property tax check in, which was almost $500,000. So there'll be stuff like that, that'll still have to either.
Yeah, there'll still be,
Property tax check, you get an actual check from the county? They don't send it electronically? Oh my God.
no, and you know what we need is.
It's San Luis Obispo.
We need all they'd have to give us a register
Right.
because that's going into
But they
tons
can
of.
still give you that separate from send the money.
We write ourselves.
I mean, I work.
Oh,
for
no.
the federal government would send us like millions of dollars each month. And it was the Treasury Department would be calling saying, when are they sending it, you know, because they wanted to immediately invest that money. So, I mean, it was like, time is money. It was like, but I can't believe they're sending a check, especially because the thing is a check is gonna get touched by so many people. And the more people that touch it, the more chance and opportunity for it to get lost.
I think.
It's just a archaic.
In all
I'm
years-
just.
in all the
going back
years
to-
I've been here, though, we've only had one check. It's pretty darn good,
But still,
but I know.
okay,
Anyway, those are both in place now, or this, the check remote scanning isn't up and running, but it will.
Right in the next.
well, that's positive. So you know, and please share that with the board, because I think that's really a positive move.
You're welcome to report on this to the board if you'd like.
Okay, well, I'll let my board, well, yeah, because my board president won't be here Tuesday, so I'll make mention of it. If you don't.
Yeah, I'm gonna be gone, I have a long meeting.
The most efficient meeting.
That I won't disagree with. Okay, is that it?
Item 3.
We're on item 3, meal per diem.
All right, that's this is pretty simple for the district. This little form we have here, we provide, we allow employees to get either advances or reimbursement for travel. For mileage, if they take their own vehicle, it's tied to the IRS rate. That changes every year, sometimes twice a year. It's simple. It's always that way. The meal per diem hasn't changed. The district's limits on meal reimbursements or meal per diem hasn't changed in about 9 years. We increased it we came to the board based on this little survey. We increased it about 9 years ago. And then over the past, say, 3 years or so, there's been almost no travel because it's COVID and all the things were shut down and it didn't occur to me. And then we recently, it's kind of picked back up and so I've seen these things coming through and I'm going, I looked and I go, well, where do you eat lunch for $15 anymore?
Nowhere.
Like it's hard to eat at McDonald's for $15. So I asked Carrie to kind of do a little.
$15 is the per diem?
Yes, that's why we're here to talk about. So I asked Carrie to do a little research on it, and she said, well, where I last worked, we used to tie it to the GSA rate. And so I said, well, do a little survey, and so we did, and some of the agencies were like the same as ours, and some were a little bit more. And I said, you know what I really would like to do is come up with a way where this can be tied to some sort of index and just change just like the IRS rate does. I'm not talking about a lot of money here, and I don't want to end up with a lot of employee disputes. One of the things that we came up with was we could instead of the GSA actually has like 35 rates in California. Every major metropolitan area has a different rate. Lunch might be $18 in one place and 19 in another. And I said, I don't want to make this too complicated. I don't want every employee to have to print something out and attach it. Can we average all the because almost all the travel is in California. And it's kind of random where it is. Some of it's pretty local and some of it's in the valley and some of it's in LA, and it's kind of all over the place. So what we propose to do is just take an average of all the California GSA published rates and use that. And that's what's listed on this proposed. The breakfast would go from 10 to 17, lunch would go from 15 to 18, dinner would go from 25 to 33. This is,
No, here.
So,
and then this would be tied to the same index, and every October GSA updates those figures.
yeah, so I'm on the GSA. So San Luis Obispo County has their GSA that is timed by federal government every October, mentions it. If we just looked at it and basically said, hey, we're in alignment with the GSA rates, and follow those guidelines, then we don't have to keep coming back and saying it's like, hey, every October we have to have a discussion about it.
Right, our goal was just to index it and then every year would automatically.
Yes,
change. It's gonna go up, right? It might go up, buck a year,
it doesn't go up a whole lot.
But that way, because the board never talks about the IRS rate, we just adjust to the IRS reimbursement rate for mileage and move on. And
You
so
know-
that's what's proposed here is we would average all the California GSA rates,
Are you averaging every county or are you averaging specifically San Luis?
every county, because a lot of our travel isn't in San Luis Obispo County. I mean, a lot of the, like if firefighters go to training in Bakersfield or Fresno,
yeah.
or people go to a conference in Sacramento or.
Well, the GSA rates change dramatically from San Francisco versus Bakersfield.
Right.
San Luis Obispo County's rates are roughly around Napa and down to San Diego if you're Oceanside area, and then, so if you take all of those rates, or could you just not tie it into the county's GSA rate?
We could do whatever we'd like. I recommended just averaging them because the travel is sort of just random. I mean,
Okay.
but we could tie it to San Luis Obispo. I think the San Luis Obispo rates are almost what we've got here anyway, the averages. What I didn't want to do is make it so that every employee had to identify. We had to check what the rate would be at that location, because it's just another opportunity to
Right,
make
'cause
an
it
error.
goes by where you're traveling to,
It's, yeah,
right?
right, where you
Okay.
travel to.
Yeah.
Like, so if you went to Anaheim, it might be this much. If you went to
Correct.
Long Beach, it might be this much. I just didn't want to end up with another opportunity for error or dispute about why am I getting, I was traveling back. My conference was in Anaheim, but I really had lunch in Bakersfield, so I didn't want to dispute, I didn't want to deal with disputes or, because we're not talking about a lot of money, $2 here.
No,
$4 there.
absolutely. I
So
just
I
didn't know
wanted,
how much work you're doing to average it out over.
Oh, it's
all of
easy.
those, or it's just easy.
it's just like, you go to the all California thing and it just,
Okay.
they're just listed there. I think there's 35 of them.
No, I'm in agreement with that.
I know 1,000 years ago when I was working down in county LA, most all counties though, or governmental agencies would have a limit on what you could spend on a hotel. Here, we're letting. It looks like just whatever the cost is.
Yeah, so
I don't know, do they still do that?
So
a lot,
true and not true. So we have within a limit when I work for the city. Part of city employment is that we must make best effort to not only for travel time, but also within the rate that's there. So we have a conference that's down in San Diego Bay. There might be, a very nice hotel right there that, is more expensive than one that's an hour away, but then it's travel time. You have to pay me vehicle plus gasoline plus stay. Does those things equal out? So it's kind of like the best effort for that. If there is a pay differential within that, plus the other side too, some individuals, depending upon their position, can make it so that they will pay the difference. They're like, I'm not gonna stay in that hotel. That's okay, well, you'll get your rate, the reimbursement, but you will pay that difference.
we don't have a lot of.
Right, you don't have a-
Travel to speak of. I've administered much more complicated systems, but they become administratively burdensome and they become a subject of dispute. Where the employee, where there's a back and forth about what am I gonna get? So, generally speaking, I mean, most employees are gonna wanna stay, if there's a conference, they're gonna wanna stay at the hotel where it's at.
Yes, absolutely.
And
I
We're-
think everyone does their best effort to,
But I think it's also in the interest for us just to tie it to the GSA rate. So that this isn't on a political side. We're not doing our own time and effort to investigate what the rate should be like. We do the averages, we set those averages for the state. And then we don't have to come back and have a discussion about it in the year after, et cetera, et cetera. Someone else is in charge of identifying what those rates are at.
I agree with that. And I think any hotel is gonna be something that you have to pre-approve in advance anyway.
Yeah,
For
I
that
mean-
person's travel. The only ones that would be impromptu, I would think would be the firefighters.
I was just the opposite.
Really? Well, because
Just
you
the
know,
opposite.
I mean, but where they stay is gonna be where the fire is.
That's all paid by, that's paid directly by the fire. We don't,
Firefighters,
we don't-
okay.
Not by the firefighter, by the fire.
But anyone else that's going to a conference, you're gonna know in advance.
Yeah,
For water treatment, lift stations, things of that
Yeah.
nature, they may go out to a conference, here nor there.
But it's not gonna be at the Four Seasons,
These are
you
almost
know,
all
these are gonna be at your,
tailored to government places. They'll be like an embassy
Yeah.
suites or, there are conferences, like our Parks and Rec staff just went to one in San Diego. That's expensive. It's an expensive place to stay. Hotel rates have gone up a lot
yeah,
in the last couple of years, like 50% or something. It's way more expensive to travel than it was just a few years ago to many of these places. But yeah, so we've generally just covered that. Those aren't usually part of this reimbursement that the district would usually grab district credit card to pay for them. But we would approve the travel, the purpose of the travel. I think every circumstance, sometimes there
but
might
you're
be.
gonna have line of sight to that. My point is you're gonna have line of sight to that in advance of the person traveling. It's not as though the person's gonna come back and say, oh, here's my stay at the Four Seasons.
Well, let me give you an example of something that was really hard to control. I was at the district was in a trial, the Steinbeck case
Yeah.
in San Jose. And you don't know how long you're gonna be there. We had booked travel at a pretty, well, all places are too expensive, but we had booked travel for so many, hotel for so long. The trial kept going longer. The Super Bowl was coming up. And all of a sudden we couldn't get anywhere. And so we had to, I mean, actually Natalie and Lori are like, we're gonna call everywhere trying to find a place. I mean, there was just no,
Then they slept in the car.
no, we stayed, I don't know where we stayed. We had some little kids, but we all needed to be together, with our turn with the whole group, because we were working at night.
Yeah.
To prepare for the next day. So that was the only case I can think of where it was really truly like a last minute, you had no opportunity to figure it out. The firefighter trainings are
They're
planned
not-
well in advance, they're not.
Yeah,
they're
you
not
don't have a board of
expensive.
investments to worry about
Yeah.
like we did. Those
So-
guys.
But does this language make sense, and are you good with
Yes.
this?
Yeah.
Yes.
With average GSAs, these numbers can go up a little bit each year probably.
So, and let me ask you this, do you have it to where any employee is picking up the meal receipt for a group?
Typically not.
Okay.
But they could, let's say one employee was gonna pay for all four people, let's say there's 4 employees going, one was gonna pay for all 4 of them. Then I would want to confirm that the other 3
And do you
employees
have it
aren't
where-
getting the per diem.
Yeah, and so do you have it to also where the highest ranking individual is the one that picks up the tab of the group?
Oh, like with no.
See, for the most part, these meals are paid by out of pocket. This is-
So the question is, I guess this is on my side, so we have two different routes to it. Currently, we have our breakdown, at least for my employment of. If you're traveling, you're going to get your MENI rate per day, so you just get a check cut to you, you're gonna be gone
Oh,
for
in
5 days. Here's a check. You take care of all the other things. Hotel is taken care of on the city credit card, but not for others. And so whether they go to the grocery store, or they go to McDonald's, or they want to go to Chris Ruth, that's on them. They've already been prepaid for their MENI.
Yeah, that's the way. it is
That's
here
what it
too.
works. There's no receipts required for per diem.
So if you want to pay for the whole meal, it's up to you to go and Venmo with all.
Yeah,
the
the
other
reason
items.
being is the company I worked for is where it was, the manager was saying, oh, you go ahead and pick up the tab and then I'll sign off on your expense.
Oh,
There was a little bit of embezzlement going on there.
We don't actually have a lot of groups going. Most of the time when people travel, it's just one here, one there. Because we can't, 4 people would be like half of the office gone at once.
So going through that itemized list on their receipts every time that someone comes back is person hours that has to go and verify.
Well, we had a system, I mean, it was all computerized.
Okay,
And it was, here are the group of hotels you can stay at anywhere in the country. So you're limited to these groups. Anything outside of that was like, oh, we
You gotta get-
we
you gotta
can
get
squeak
exceptions.
by, we can squeak by because it's off season.
So, so these travel things can be very cumbersome.
Yeah.
And so I've chosen to keep it sort of simple, right, and so you're not doing, we don't have a travel, we don't have like a person assigned to coordinate all
But
the
I think
travel.
there's gotta be some policies in terms of who's approving it and so that there isn't some risk of somebody.
And I think we're taking way too much time.
well, no, and I agree, and I think the idea of saying is,
There's
if
gotta be
travel,
some
if travel
policies
time's been
behind it.
approved and you have 5 days of travel. Your meals and et cetera, this is your check, this, is- you take care of your
Yeah,
own stuff.
yes.
And then therefore, we don't have to sit and audit it,
It's done.
it's
Yeah,
done.
yeah, if you wanna stop
You
at
wanna
the store,
save
pick up
your
bananas.
breakfast and lunch to go to some
Correct.
nice restaurant in the evening, yeah, so be
We
it.
had to do the same thing, but we didn't get it in advance.
Yeah, and the employees have a choice. If they know well and ahead of time, they get the advance. A lot of times people just do it after the fact. It's, you know, it's like some of the times, maybe a lot of them are for just like a one day. They're not really gone for training. They're just like, they had a class in San Luis Obispo. So they're just turning it into a thing for a lunch per diem. That's it.
Yeah.
Okay.
I'm
Okay,
good with this.
Yes,
So
okay.
is this something that's gonna go before the board or? Okay.
Yes, because the board approved the last adjustment. The real change isn't the numbers, it's this policy that ties it to
Yeah, yeah,
GSA.
So we'll not have to go to the board again.
Not unless they want to make a change, not every October.
Right.
And this way, we don't inadvertently get too far behind. I
Mhm.
just felt like, okay, so our right now, again, where do you eat breakfast for our current breakfast is $10.
17
Get
now
your-
currently, so.
get your coffee, get your coffee and a donut.
I'm not sure, I think at $10, it's not hard to spend $10 at Starbucks. I don't even go to Starbucks.
If you
It's cheap.
find a restaurant,
either.
if find a hotel that gives you food,
Well, that's the thing, is if the hotel offers breakfast, you don't get that.
Right.
Yeah.
okay.
And there's the policy already has like hours and all that stuff.
I'd like to have $68. Feed me for a day every day. I'd like to have 74. Okay, moving right along. Report
Here's
draft.
the real reason we're here today.
Okay,
So stretch out. So we provided all of you in advance these,
I didn't get that. Where, was it emailed?
Well, we can
I
make
go
copies.
make-
Well, I've got my laptop here. Let me see. I don't recall seeing that.
Do you want one to write on? I can. make you a
Yes.
copy.
Yes, please. Thank you.
Eric, you have,
I got another.
Do you want a copy too?
Take a 5-minute break.
okay, all right, I'll need some water.
There's one I did not download accidentally.
Is this our water? Can I have one of those bottled waters? All right, thank you.
Eric,
Actually, I've got the digital copy.
I think it's already in the machine.
Okay.
Let's see. When did she send that?
It's linked to the agenda.
Oh, okay.
Yes.
Maybe that's the problem.
Did not download that. But it is linked there. Yes, please.
What's that?
Does yours have one of these?
No, I
Oh,
don't,
it's just
I don't
me.
have that. Here's her agenda.
In the agenda, bottom item, highlighted draft budgets.
All right, I got it, but I still want a paper.
Yes.
Make some notes. Thank you, my dear. Oh, you're welcome.
Thank you.
It's even more. Hot off the press.
Follow the old one, please.
Yeah,
Yeah.
the doodle machine,
You just dated yourself.
I did.
Urban
elementary
neighborhood.
school,
Yeah.
streaky purple writing.
Oh, gosh. I brought my readers.
You're gonna need them.
I am.
Yeah.
All right, well, first, let me just describe what you have in front of you. This is not a complete budget, it's like maybe a quarter of our budget document. But it's sort of the building blocks of the budget. So these are the line items for each of the district's funds. And the formatting is the same across all of them. You'll see on the top of the first page for each fund, all the revenues and transfers, so all the money coming into the fund. And then the bottom and going into the second page typically are the expenses and transfers out. Across the top or on the columns, there's a brief description. I'm not sure how, we can go over any level of detail you like. For the most part, the descriptions are the same unless they're kind of one-time or isolated items. Across the top, you'll see we have the fiscal year 2021-22, so 2 years ago, the budget and then the actual, that's the audited figures for the prior fiscal year. Then you'll see the budget for the current fiscal year, 22-23. Projections, this is not an audited figure, projections are like 60 days old at this point. For the current year, and then the proposed budget or the draft budget for next fiscal year. And that's the same across all of these funds. Natalie has access to older information if it's necessary, or whatever we end up needing. We can go through the water fund in some detail, and maybe the other funds will go quicker then if you'd like. So on the water fund and Eric, just for your benefit, so some of these terms may not sound familiar. User fees that's what ratepayer money coming in. So you can see that like our projection for this year is a little lower than budget. It's just totally because we had a really wet year and there was a lot less irrigation during the winter and early spring. So we had less revenue coming in than we had budgeted for. We have not anticipated next year being as, that was a very unusual winter. And so we've accounted for that. We also account for some new connections. For example, we anticipate about 36 new apartments having occupancy next year that didn't exist previously. Those kind of things. And keep in mind that water is base rate plus usage. And so the base rate always comes in no matter what gets used. Service charges are new account connection fees, door hanger fees. If people fall behind and get ready to be shut off, we charge a fee for hanging a notice on their door. There are reconnection fees. If water has to get turned off and we have to go turn it back on, we charge them $50. If they're late and they accrue a penalty, that ends up in a service charge. So those have gone up. You can see over the last couple of years, primarily because during the pandemic we didn't do a lot of this. We were prohibited from doing a lot of these services. Nobody could be shut off for being late and that kind of thing. They still accrued interest, but there weren't door hangers and stuff like that. Grants, these are happen just unusually, but this past year we had a grant to connect the Santa Lucia school. So that's that money that come in. We don't expect a grant next year. Interest, this is on the operating funds interest for water only. So water is going to have interest accounts in several areas: asset replacement, capital, non-CMNO. Those are all going to accrue interest. In this line item, you're only looking at the operating fund.
But why did it jump? Because we've got budgeted is
Interest rates
32,000.
not of the fund, right? So
Pardon me?
your interest rates
From like,
zero.
So it's because of these CDs and all those funds.
And late, all of our interest rates
Yeah,
are gone up.
okay,
2 years ago, it was like nothing.
okay.
Miscellaneous income are for the water fund, this because every fund's gonna be different, are primarily our will serve applications. The development review, will serve letters, not the payment of the actual development, the processing of those. Sales side revenue, we have three, and this is likely to change because there'll be an item on the next board agenda to add another piece. But we have carriers up there on the top of the hill. They pay average about $2,000 a month. And so again, that budget figure is probably understated for next year, if in fact the lease is approved and they begin paying.
Who's that one?
Singular AT&T. Recovery of bad debt. So everyone, this is pretty small for us, but every once in a while, an account will close, the people will move, will be unable to collect.
Yeah, or someone's passed away.
Someone had to die or whatever. This is very small for us, because in most utilities, it's gonna be a much bigger issue. In some rare cases, we turn that to debt collection.
Yeah, we have maybe 6 or 7 accounts at collection right now.
So does this include those folks during COVID who stopped paying?
Not if they haven't moved,
Pardon me?
not if they haven't moved.
Okay.
Their account, if their account is still with our account, it's not
Yeah.
showing up here.
So it's, okay, so this is really where you're writing it off as.
Well,
bad
this
debt.
is if we've written it off.
And
then
now
we
you're
collect it.
recovered.
Yeah.
Okay,
Very small. Okay, these transfer ins are all gonna be a little bit more complicated. This transfer in NASI debt, this is coming from a separate account to pay our annual debt service on the NASI Middle project. It's this fund essentially is a pass through. So that's revenue coming in from the NASI Middle account, which is a set aside for the debt service. NASI recharge, this is this $425,000. This is this is the NASI Middle recharge recovery project. We had established a $500,000 budget to do the initial planning work on it, not construction, but the planning work. The $75,000 that's projected is probably not gonna happen all this year, but we have incurred about maybe $30,000 in expenses. And if we're able to secure an easement, that'll eat up the difference. And then the remaining amounts being budgeted for next year, we probably won't spend it all next year, just because it's so hard to get these services taken care of right now with engineering and planning and those kinds of things. But that's money coming in from the asset, the capital account. Here, the next one is funds to replace 2 service trucks. This $83,000 would be a split between water and sewer. Most of our utility crew, we split their duties between water and sewer, and so the split is based, so you're gonna see a similar figure in smaller but similar in the sewer budget. We have 2 trucks that are due for replacement, one of which was funded this year, but due to the availability of vehicles, we don't think we're gonna be able to make the actual purchase. We might be able to issue a purchase order, but the purchase itself might take place next year. So that's why you see the budget earlier and then it being carried over with nothing being expended. We've recommended the replacement of the Platts River well. That's a well that's been in poor condition for quite a while. It runs off a natural gas generator, which that doesn't run well, doesn't have electricity to it, and it's way too close to the river itself, and so we can't use it anytime there's water in the river. Because there's just a
is
requirement.
that the
that we-
one that's been shut down?
It's right next to the Platts Deep well. That's the one that had a high arsenic.
Okay.
So the
that-
replacement of the river well further away from the river with power to it will allow us to blend the 2 Platts wells and get the deep well back online.
Okay,
So there's we have a substantial balance in the asset replacement fund in the water fund. The next item you see is a skip and drag. We plan on replacing, we have a 1998 John Deere tractor. It's about 25 years old. It's really just become in too poor a shape. And it's a little small in terms of its what we need. The primary, there are 2 purposes for it. We're looking at the water fund. In the water fund, it's gonna be like weed abatement. In the sewer fund, its big activity is providing maintenance at the Selby ponds. And maintaining that pond site is really critical in order to keep the percolation going. So this would replace about a 25-year-old tractor with a larger piece of equipment. And I will have, Justin will have photos and some better information when the board is a workshop on this topic. Smithwell, we had replaced that last year. That's why it's listed. So all the other items were from prior years that you see on the revenue side. There are no rate adjustments that are scheduled to take place during the next fiscal year for water. So that's that. Any questions on the revenue?
Mm-mm. None here.
Okay, salaries, a couple things. One I want to put out in sort of a global way. We have built in a small kind of buffer in the wages district-wide to permit the board to consider a cost of living adjustment. That's included in here, and it's included across all funds. There was also some catch-up on some equity adjustments that were recommended that the board's aware of. And those funds are built in here, not yet approved. The board would have to approve those by separate action. But there's enough money in all these funds to accommodate what we estimated to be the CPI and those equity adjustments that were previously scheduled, previously identified.
So what did we put in here for a COLA adjustment?
Well, for a buffer, we put 4.5%,
Okay,
but we think that'll come in lower than that.
yeah,
But the late-
This is across the board,
Yes,
so individual stations could be above and below that.
yeah, there's still the equity adjustments. Which I don't think there's any equity adjustments. I don't recall being any in water.
utility worker
Utility worker, okay,
and customer service representative. Yeah, there were some. There are some.
okay.
There's a couple other things that are important. We've done some reorganizing with the way we funded some of the positions. For example, and really, we talked about this when we
Yeah.
talked about the cost allocation plan. We moved the customer service for budgeting purposes, customer service position out of administration and into water and sewer only. So that's one of the reasons why this jumps up. The other reason that there's a big adjustment here is because every year when we budget the wages for all the utility crew, we base on the best available information on the recent past in terms of how they split their time. So like the district 10 years ago, it was about a 70-30 split. 70% of the time was spent in water, 30% in sewer, and that kind of trued up. Over the last 5 years or so, since we took on all the east side wastewater, that we're now treating that. That has inched up considerably, and it really became closer to like a 60-40, and I think now 57.
43,
Okay,
and now it's getting back to 60.
so one of the changes is last year was 57-43. Over the past several months, past year, the actual work effort has been about 60% water, 40% sewer, and so that's what's reflected in these costs. So it's overtime. Okay, that for water and sewer, overtime is largely our person on call. On call means we have somebody available 24 hours a day, 7 days a week, and we pay an employee to be on call. That comes out of this overtime figure. And then additionally, that person on call does a weekend duty, a duty shift, about 3 hours, 3 to 4 hours each weekend and each holiday that comes out of this. And then if there's any emergencies or any, sometimes there's programmed overtime, but typically it's to respond to like an emergency, broken water line, et cetera. These other figures, FICA, SUI, those are all just roll-ups. I will note our workers' comp is going, rates have gone up. And you'll see that across the board.
First retirement, why is that decreasing?
So first retirement, this is going to be hard to follow. It's going down. Not up, because we paid down the UAL.
No, it's just like we have extra
You
positions.
paid it down previously?
Yeah.
We paid down the
The
UAL,
one-time cost going into.
and so starting in July,
To make that one time. payment.
our annual payment went away. Now it's going to come back, but maybe not as high as it was before.
But it's gonna nominally increase unless another one-time payment
Yes.
goes in, decrease it again.
Unless PERS starts doing much better.
That ain't
Yeah,
gonna
I
happen.
doubt that.
That ain't gonna happen. That
Um,
ain't gonna happen, but I'm not sure.
Health insurance is going up for a couple reasons. One, because we've slid another person into these funds directly. And two, because the health insurance rates went up and we've budgeted for a 10% increase starting January. We don't know what those numbers are gonna be just yet. I think they get finalized in July or August. HRA, the district funds a $2,000 per employee to an HRA, kind of in lieu of dental or vision benefits, but the benefit is more broadly usable, can be used for co-pays and prescription drugs, etc.
So legal services, is that Steinbeck or is
Yep.
that in,
Almost all Steinbeck.
yeah. When is that bleeding gonna stop?
Never.
Almost all these other things are pretty standardized, just let me know if you have any questions. I'm gonna just try to highlight ones that have made a big change, but
Nasi, do we have a rate projections? On that line, 62200 Nasi operating?
yeah, this is based on the Nasi Meadow budget that's pending approval by the county. So we're a member, just like the city of St. Elizabeth
Yes,
is.
we are.
Yeah, well, we just, this is, their budget was just blessed a couple weeks ago by the Nasi Meadow Commission. It goes to the Board of Supervisors. We get billed. But there's sometimes some adjustments to that if we don't use all the water we project, the variable energy. Vehicle costs are, up, but not necessarily higher than what we than this year. Fuel, it just, we had some maintenance issues. Let's see,
And we're gonna keep telephone the same?
yeah, we moved from, the reason it went down from last year to the current year is we implemented the voice over IP system. And we're pretty stable in terms of, it's a combination of cell phones and the voice over IP costs. Couple of iPads are on
Some
cell service.
little dork, which voice is it to?
Well, it's through Digital West.
Okay,
Other than that, I can't tell you.
yeah, there's some things happening in the voice services where they're gonna be moving on from cloud service only, and some of the VoIP companies are actually gonna solve their VoIP solutions, such as Avaya, Mitel. They're actually
Get out of it.
getting out of the VoIP business.
Those two names don't ring a bell, so.
Okay.
No, it's okay.
That's a good thing.
Electricity, this is really primarily just our wells
Mhm.
for the water fund. Water is the cost at the wastewater plant for the water that's used, sewer, same thing. That's our own, checks we write to ourselves. Sorry, here's the same papers. Let's see, gas is the gas utility.
We're talking natural gas?
Yes.
Okay.
Travel, starting to create, there's more opportunities coming back.
Mhm.
Other employee benefits. Can't remember, what is that?
Is it the boot allowance?
Yes, that's what it is, yeah, boots, education, and related to travel. Dues were, members of some organizations. Fees in water are, remind me.
Oh, it's, well, that- drawn a blank.
You have the budget, is that your budget?
Yeah, but it doesn't have.
There's a
any-
description, it tells you what it is.
No, because nobody gave me that. They don't.
Oh, no, but the little page that we have. But you don't have that in here.
I was gonna say fees are usually like,
Or like LAFCO, yeah.
yeah. Maybe it's the wastewater permits.
This is water though.
Okay, water permits.
Oh, yeah, you're right, it is the water permit. While she's looking that up, I can describe water production. The next line item is a significant one, 254. In our case, because the wastewater fund treats water and percolates it for the benefit of drinking water down the road, the water fund pays the wastewater fund for that service. And we price the water based on the same cost per acre foot that we pay for Nasi Meadow water. So it's just, we just sort of link those two historically. And so what this is a projection of how much wastewater is gonna be treated and percolated at Selby. And that's where we also percolate the Nasi Meadow water. So that money stays with the district, just goes to the wastewater fund. Bad debt, that's the area that's what we've written off. Debt service, so this is the bill, this is the debt associated with the Nazi Meadow project. And then the admin allocation is what we've already spent time talking about a couple months ago, based on the new formula.
So it just says provides for state, federal and county charges associated with operating as a public water supplier. So
Okay, I
that's
think
just
those
the backflow.
Yeah, and
That's
then
what
also the APCD fees for generators, all those kind of things. So those are the ongoing operating costs that we've broken out. One-time expenses. I'll only talk about the ones that have programmed funds for next year. Water Atlas, it's really digital upgrading of our data like through a GIS. We don't do that in-house. For the water system. The Water Conservation Rebate Program is recommended to be funded again. This is covering like lawn buybacks and the removal of water softeners. Program the district's developed. We probably won't spend $30,000, but that's what we had intended to spend when this program was first or most recently kind of came back. The master plan, we've done some work and we've identified some new items. We'll spend some more time on this with the board, but we'd like to see that through for the master plan update. Urban water management plan is underway, about halfway done. We think we'll conclude early next fiscal year. That's the remaining funding. That project's already been awarded. The Santa Lucia School. This is what this $24,500 is the cost we paid to a contractor to install the connection. The rest of the money was a reimbursement for district staff for overseeing the project and actually pay for the water unit to the district's cap. So that's capital income into the capital fund. Wash stations, we're required to have them every place you have chemicals and ours are just really in kind of corroded shape. They don't get used much. And so we're trying to do a system-wide replacement. This thing says various raising utilities. This happens when the county does an overlay or a pavement project and they end up burying the manhole covers or the valve covers. Now, in this most recent case, we didn't get a lot of notice that was happening. Otherwise, we could have coordinated and perhaps done it with that contractor or done it ourselves. But this was kind of a rush job by the county. And so we've identified a number of locations that need to now, we need to jackhammer out and raise the utilities and concrete in.
The county's got a rush project.
It did.
That's a.
Mainline valve replacement. We've got some valves in this water system that are seized open or seized shut. Those valves need to be jackhammered out. It's a pretty big project. Each one's a pretty big project. These are 4, 6 or 10-inch valves, it just depends on where they're at. So that the valves can be operational. If they're seized open, and we have a water leak in an area near that valve, we won't be able to get a complete shutdown of that water. It makes it very, very difficult to make a repair. The skip and drag, that's the tractor we talked about earlier. Service trucks we talked about earlier. Nazi recharge we talked about earlier. Flats River we talked about earlier. This locator is a device to help locate underground utilities. We use that a lot every time someone does a 1-800 USA dig or the USA calls in an underground service alert. We identify, water and sewer lines. The locator is like a metal detector for underground utility locations.
I am gonna make a change on it though. Instead of account number 70,000, it's gonna be 61100 supplies.
Okay, yeah, so it's under $5
I
grand.
just caught that, yeah.
That's it. Those were the one-time expenses. Sort of what you see at the bottom line here is we're bringing in about $730,000 more than we proposed to spend in the water fund. And you'll see this kind of pattern continue. So that's water fund. Moving on to the sewer fund.
Hope that's gonna be 0 this year.
0. So user fees, same thing. This is revenue. These are all, this is a little more straightforward because there's not much variability in it. From year to year, we can have some new connections, but for the most part, residential customers pay a flat rate. Commercial customers pay a flat rate plus usage over a certain amount. So it's a bit more predictable, in terms of, revenue. Service charges, same issues. These are late penalties and those kinds of things, new accounts, interest income, same as what we talked about before. Miscellaneous income for sewer fund. Actually, don't know what there is. Sewer fund.
This is.
It can be fees for like subdivision approvals, those kinds of things when there's a new development going on, not a capital fee, but fees for reviewing plans. Sale of wastewater, this ties directly back into the water funds purchase, the amounts tie together, so revenue to the sewer fund shows up here. Bad debt, same thing we talked about before. On the project side, a lot of these are gonna be the same. You have the service trucks, the tractor, again, a larger percentage of it being sewer. There is a replacement of an aerator. Just learned today that we don't, this aerator is really intended to be like we want to replace it, but I don't want to wait till the aerator dies before doing so. Right now, what we're doing is we're waiting till the aerator dies and we're pulling it out of the water, then we're servicing it out of the water and then putting it back in. And if we can't fix it, then we order a new one. And it ends up being a big gap. And in the meantime, we lose wastewater treatment quality. So we want to buy a new aerator, take one out, have it there. So the next time one needs to be,
So there's always one.
yes, there's one on the shelf, and when the crane comes, we're always gonna take it out, put the next one back in, we're never gonna.
Yep.
This number is now gonna be able to be about 51,000 instead of 66. Yeah, we got an updated quote on that. The Headworks bar screen, this, we have a mechanical, screen that catches debris and puts it through this machinery that, actually, the one we have now came from the city of Paso Robles. It was gifted to us when they did a wastewater upgrade about 7 years ago. And there's the screen itself, this mechanical piece that's yay big and maybe 20 feet long as it goes around in a loop, is a wear part and it just needs to be replaced. And then we have some problems at the Grenache lift station with pumps that are constantly burning out. We get them rebuilt. We have a spare, but we want to get a new pump. And some replacement of some controllers because we're having some, there's a lot of over time, the controllers for that piece of equipment have changed. And there's some redundant, unnecessary control features at that lift station that make it a little bit harder to diagnose a problem. Grenache is on Grenache. It's by the Vineyards. Services primarily, just services the Vineyards, about 100 homes in there.
So what about, do we have funds set aside for the issue on Los Angeles and Bennett for that lift station?
The odor,
Yeah.
yes, it's programmed this year and it's scheduled to be done next week.
Oh, okay, so it doesn't need to be carried over. Okay.
Well, there'll be some operating costs. We've got it in here.
Okay, all right.
But the capital work is scheduled to take place now. I think we got all the equipment in, the contractor shows up next week. Okay, so we talked about how salaries worked in the wastewater fund and the water fund, the same way wastewater, same folks. A smaller percentage of it goes to wastewater. Overtime, same issues. FICA, well, I'm just gonna jump to things that I think that you may have, you stop me anytime, but gases and chemicals, that 50 grand, that's primarily the bioxide for Evoqua. That's the odor, the chemical we should begin using here in the next few weeks. So you see the gases and chemical costs have kind of been all over the place. And the wastewater, this year, it's this amount. Most of this $50,000 is for bioxide for the Evoqua system. Electricities are lift stations primarily and at the wastewater treatment plant for the aerators. Debt service, so last year too, we've paid off that first debt with the State Water Resource Control Board that expanded the wastewater treatment plant, which was hallelujah, because we're starting to accrue now some capital funds. And then we have a new loan, this $58,000 new, it's not that new, it's about 4 years old. This is related to the East Side Force Main project. That's that debt service, so another 16 years or something along those lines, not gonna be paid off right away. However, if you go to the next line item, first one on the next page, it says debt service interfund. If you remember when we did the East Side Force Main project financing, we had a grant, we had a state loan, low interest state loan, and then we lent ourselves the money from the water asset replacement fund to the sewer fund to cover that gap financing. I think originally it was about $1 million. We had planned to pay it off. Maybe it was 10 years. Yeah, okay, some period of time. We have a few more years left. However, we now have enough money, enough cash in the sewer fund just to pay it off. Save the sewer fund the interest on it. It's kind of a wash, really, because we're gonna get less interest on the cash in the bank, but we owe, this money is owed to the water asset.
What's the interest on that loan, do you know?
I think it's 3%.
Yeah, I think you're right. Somewhere in there.
So is it,
You're not getting any more by saving it.
So I was gonna say, yeah, the interest left on it is like 55,000.
Unless there's one-time cost that money's going to.
You know, so really what we want to do is sort of true up the financing because we're getting ready to deal with a lot of challenging sewer issues.
yeah,
And by eliminating the debt service payment, it'll be a lot easier to forecast our funds available.
for
going
new
forward.
things?
So it's gonna be paid one way or the other, but we now have enough cash in the sewer fund just to pay it off and be done with it. So we're recommending that. It doesn't make a big difference either way in the long run, but. And then admin allocation, we've talked about that a lot. Okay, I'm gonna just jump to the new expenses, source control program. That's what we have the Wallace Group doing for us, for industrial and restaurants, fats, oil, and grease. That's working pretty well, making some headway there. Master plan, we've actually increased funding here. We want to do a facilities assessment. We're facing some pretty big hurdles coming up with the sewer plan, so we want to bolster the master plan work to help ready us for that. Wastewater atlas, that's also mapping, GIS mapping. Service trucks, same issue. Raising utilities, manhole covers, same issues, raising manholes. Aerator, this will go 51,000 instead of 66. The skip and drag is a tractor. At the 51. Headworks, that's what we already talked about, and the lift station. So even with paying off that debt, we'd still bring in about $350,000 more than we're spending. Even with paying down the debt.
That's
So
great.
we're not reducing we're not taking the cash balance to a unsustainable level. Drainage fund, this is a very small fund for the district. This is a bit challenging. The drainage fund is technically an enterprise utility. We have a couple of small neighborhoods that pay into it but storm drainage has historically not been treated in the same way that water and sewer utilities are, so it's a lot trickier and maybe challenging to get their rates to go up. Nonetheless, we got user fees, again, that doesn't affect the whole community. Salaries are just a tiny percentage of the engineers work. We do some annual reporting and some roll-ups associated with that you see here. There's a report that gets done annually. That's the fees issue. And then the admin allocation, here's one area where we improved. The admin allocation has gone down because of and it makes a pretty big difference in this little tiny fund. Because we were really underwater for a while and it's gotten better. So we still end up losing money, but more slowly. So this is still a fund that's going to be a challenge. When we get close to running out of money 3-4 years from now, we will either have to proceed with a rate increase, and it may not pass if it has to go to a vote of the rate payers, or begin siphoning off a very small percentage of the property taxes.
So this would be a Prop 218.
Yes. There's still a cash balance in the drainage fund. It's not an imminent problem, but
So let's assume that we're at that point where we have to do a rate increase, and if it's not approved, what then?
Property taxes.
It just go into property tax?
You have to siphon off some property taxes.
Take it out and more, so it'd be less to Park and Rec and less to fire to cover this.
Yeah, about 4,000. Yeah, or 60, it's about 6,000 bucks. The issue really isn't so much that the rate increase would be approved, or wouldn't. We'd have to decide, so right now, and I haven't done any recent research on this, but there were some bills that had passed a few years ago at the state level that said, hey, storm drain utilities should be treated just like water and sewer, and therefore subject to a 50% protest as opposed to 50% approval. It's a really big difference.
Yeah.
However, it's untested. There hasn't been a court case that's made it through an appellate court that we can really bank on. Templeton will never be the lead case. It's foolish. So we really should wait until there's a court decision that allows us to rely on that bill. And if it is, then you'd have a lot of confidence that you could do a rate increase the same way you do water and sewer based on a small study and put it forward and deal with the protests if there were any, and then approve it. Otherwise, you probably have to take a more conservative approach, go to those ratepayers, ask them to vote, and we'd have to rely on more than 50% of the votes cast to approve the rate adjustment.
And so the drainage is actually in a specific location within TCSD, so it's not something that benefits all.
Correct.
So is the reason why they're not paying directly for this service?
They get a bill from
Yeah,
us.
it's $1.60.
Oh, they get a bill,
Yeah,
It's on their bill.
so.
so
okay,
they get the
so-
bill. It's just.
And then we're also subsidizing it through the property tax.
Well, we're not right now. No. it's
Oh,
not
we're
right
doing streetlights, that's what we're doing, okay, so it'd be, yeah, okay, so it'd be streetlights, Park and Rec and fire. That we would have to then allocate for this as well. If it comes down to that, okay, thank you for that.
Okay, so the general fund is, I call this administration funds, really doesn't work like a typical city general fund. These revenues, so we have rental income, that is this room. Used by a small number of groups. Miscellaneous income is just tiny nickels and pennies coming from some SDRMA reimbursements. It's just really hard to predict. Transfer from other funds, this is the revenue source for the district, right? For the admin fund. This is that cost allocation plan that we spent time talking about from all funds. And then the transfer in the CERBT, that's our trust account for post-retirement medical or health insurance. So those costs match what are expected to be our retiree medical costs. That's it. Salaries, you'll see they actually go down. They go down because we removed that position from this fund. Okay, so you'll see there's some savings everywhere there. PERS retirement goes down because the UAL is gone. For now. Health insurance, this is, we've separated now the retirees from the current employees, so the $88,000 are current employees, and the 174 are district retirees, all from all funds, all retirees. HRA, that's the $2,000 per employee. Annual audit, this figure will change based on, won't change necessarily, the budget won't change, but the actual cost will be based on whoever you award it to. We actually did lower this a little bit because the prices came in a little bit better than we thought, still giving ourselves enough money to pay for any of the lower cost firms. Professional services, this is all kinds of things like CIO, for
Yeah, CIO, maintenance on the copier.
district wide, CIO district wide.
Yeah, district wide.
It's a bigger dollar. Well, now let's finalizing that director of comp, that's what we pay the board members for attending meetings. Stormwater, this is the second half of the annual stormwater prevention or stormwater report that gets filed. It's budgeted in admin fund because it affects several other funds.
Yeah, so professional services is also our web hosting of the
Oh, Civic Plus.
website, yeah, Civic Plus, it's Municode codification, is our whole Tyler online billing system.
Oh, everything's
Payroll,
covered.
everything, it's
All the
everything.
GL is covered.
It's everything.
Legal services, this would be things, support for legal items that relate to, agenda preparation, Brown Act compliance, not for anything that's attributable to another fund or activity directly. So sort of a broad and generic. So purchase services are recommended to be down a little bit, that's,
It's internet, Digital West, record shredding, copy maintenance, postage, pest services, billing and
okay,
services.
and postage does not include the mailing of the utility bills, that's
Correct.
paid by water sewer directly.
What's
Clean,
security?
It's the alarm
It's alarm system?
system.
you haven't seen the security guard walking around?
Yeah.
Armed security
He's
board
here
meetings,
24/7.
we had a cat for a while, remember how well that worked?
Yeah.
Yeah, after the cat.
It is
He
gone.
went missing on July. Seen him since.
So what about property liability insurance? We're expecting that to jump.
Oh, yeah.
That's probably twofold, we've had claims now, a couple years, the last couple years, and then just rates have gone up.
Yeah, a lot.
Significant.
And credit card fees, we're not picking up the fees for people who use their credit cards to make
We
any
aren't, but
payments.
they do charge us a little monthly fee. Like a,
Didn't we change
We've,
that? to
we've
where
passed,
the
we've passed
consumer-
along the specific charge associated with each transaction, the transaction charges,
Right.
but there are still costs of.
there's still a little fee to us, like a monitoring fee is a lack of a better word. They do charge us a little something, but they don't charge us the.
Transaction fee is
Transaction
passed
fee.
on to the consumer. They pay that. So this is just to have the technology available.
I think so, yeah. I'd have to
Well,
look
we're
it up.
remember, this is gonna come also from Tyler, so we're paying this in a couple of different ways. Our credit card processor for making payments, for having that equipment, and then we're also
Yeah,
paying,
but I don't think that gets charged. This
Into this
doesn't
account.
get charged into this account.
okay. There's another merchant processor for the online bill pay. Okay, the one-time expenses, we have some roof, it was recommended that we do some roof maintenance. We have a metal roof. But we had some leaks last year that got fixed, and that vendor said, you need to go through this whole thing and seal everything. It ends up being about $7,500, so we recommended splitting that between fire and admin. That's that cost, that $3,700. And then that's it.
And then the cloud server were,
We made that upgrade a couple years ago.
okay,
So you have the one-time expenses is really just the roof. We've got the asset replacement contribution where it says funded replacement in here, 30 grand. That's about it.
Oh, I think the credit card fees, most of that is through Park and Rec. So we've been having out at Park and Rec, we're trying to get up and going the online services. We've been trying for a couple of years.
We just have some compatibility issues with the software that all the sports programs are not tied directly into our system. They're through another vendor
Independent.
like Cal
Yeah.
South for soccer and the AYSL for softball. And so
And our T-Par setup.
they're not compatible.
but they're
They
not
haven't-
consumer transaction costs. They're
And-
just the transaction costs for having the software.
No, it's the consumer
So it's the
transaction cost.
consumer. So why aren't we charging the consumer for that transaction?
We are where we can.
Yeah. So we're currently, I've been working on this for a long time with T-PAR which is the Tyler Park and Rec module. And hopefully in the next couple months, we're gonna become a beta tester and go to a different merchant provider just for Park and Rec, to where they can absorb it.
They're just covering theirs currently.
But currently
we're not able to pass that.
Well, not in all cases,
Yeah.
but actually, we're just moving to a new platform for soccer, which is supposed to be able to be compatible. I don't know if that's happened yet. I don't,
I just think the goal should be to pass that.
it is,
It
it is.
is,
the-
yeah.
To a different fund,
Well, to have the consumer pick it up.
yes, or
Yeah,
but even
that's
just to
the-
allocate it, just to say if it's.
Not,
parking-
I think because philosophically, I think back in the day, I think there was.
Yeah, our
we
board
had
voted.
Several $1,000s worth
It
of
used to be like 20
transaction
grand.
costs
It used to be.
that we used to pick up.
Okay.
And we kind of shifted that, so I
Mhm.
just want to continue with that kind of philosophy that the consumer, if they use their credit card, picks up any of the transaction costs.
And that's the intent. We've just had a little problem
Yeah,
with
yeah.
the software. Yeah.
I think the biggest challenge we run into is a lot of it's pretty out of our control. For things like Scoot Camp and things that are just Templeton, we can decide how to route those
Yeah,
registrations. But for soccer
You're
and
using a third
softball,
party.
we're part of a consortium.
Yeah.
You know, whatever, Cal South, for example.
yeah,
And so they dictate the registration software.
understood.
So, and then that's changing again right now.
Yeah, I just want to make sure that we continue with. the
It is
philosophy of-
absolutely our effort to not absorb those costs, and to have customers who opt to pay by credit card to eat the transaction. fees. Okay, so on to fire, and hopefully this ends up being better news than you expected.
Hopefully,
So say, it's a little sloppier because of safer, right? That just made it a little more
Yeah.
cumbersome. That $218,000 you see in revenue is tied to all the expenses for the two positions that are paid by Safer, dollar for dollar. We're not going to be able to claim any money in excess of what we pay those folks.
Yep.
So if you wanted, what would it
Their
look like
salary
without
is
Safer? Yeah, their wages are less, this is
Then
less. So,
Okay.
interest income, we've talked about that. Miscellaneous income, this is primarily development services, this 20 grand. Last year, when you see 180, 167, that was the out of county fire assignments where that money came back in.
And some sale of equipment too.
Oh, that's true. San Luis ambulance, we get some small reimbursements for supplies from the ambulance company. That's part of the county's ambulance contract. Property taxes, this is the historic split.
Oh, okay,
Okay, the property tax amount here, this 1.086 is based on the county's estimate. In my time here, the county's only been low once.
Yeah.
Every other time, I'm sorry, only been high once. Their estimate every other year for the past 10 years has been under, we've beat the estimate. We've still used a very conservative figure here. Measure A revenue, this is gonna be within a few bucks. Weed abatement, this is all over the place, it's $7,000. The number doesn't matter that much, because whatever we collect, whatever we pay, we collect essentially. If it's lower, that's great, but we'll have a lower cost for weed abatement. These are folks who don't end up abating their own property, and we have to have it abated, then we go collect from them. Probably a subject for a lot of discussion. You see a type 1 engine chassis deposit, $450,000. This will be coming out of the capital account into revenues in order to make a deposit on a chassis for a new type 1 engine. I know that'll be a subject for a substantial discussion. That's what we would anticipate being our down payment essentially on a new engine if we ordered it next fiscal year.
which we would not take delivery of until
2 years.
probably 2 years.
Yes.
Yeah.
But this way you can see how it impacts things if it is proceeds. I do want to give you a little update. You know, we were, as it relates, I'm gonna hold off. Let me get to the expenditure
Okay.
side. We're talking about that. Okay. Radios, these are income from asset replacement to replace some handheld radios. And then income from asset replacement to do the HVAC system upgrade, replacement. We've talked to you about, we've got some problems with the HVAC system upstairs. It's operating right now, but we've put money in there in case it fails. So salaries includes all the current positions that are authorized, including the safer positions, including the buffer for COLA and potential equity adjustments, kind of a worst case scenario expense wise on salaries. Overtime, this is really difficult. The $58,000 figure is not optimistic, but not pessimistic. We've had a lot of difficulty in figuring out what this will be, and it does not include any out of county assignments, which of course would make it go way up.
But this seems to be not realistic either, because if you look at the actuals for 2021, it's 70,000 and some change. And we are projecting it to be 81,000
Well, this year.
this year.
Current year had the 2-week out of county assignment, so it's just not comparable. We haven't budgeted for.
But we're
any-
still projecting it to be $81,000, close to $82,000.
Right,
So
because of the out of county assignments. It'd be half that if it. were-
So we're not expecting any out of county assignments?
We haven't budgeted for any. If we have any, it'll have to be, because you'll have a bunch of revenue too.
Okay,
so
so the
the revenue
revenue
side is not
would
anticipated.
offset it.
Yeah. The year before, that $70,000 figure,
Mhm.
that was the year we lost 2 full-time employees, and we had people working overtime every third day. So that
Given
impacted
our
us.
track record with, some of the turnover that we've had.
That's why I said, I think this is a figure I don't have a ton of confidence in.
Yeah,
It's not pessimistic, it's not.
I just think it's kind of underestimating what it has been in the past. Because we have such high turnover, I mean, overtime is a given in the fire department. So it just seems like 58,000 is a little short.
We base this on what we expect to see, assuming no full-time employee turnover. The turnover on the part-time ranks, the reserve ranks don't really affect overtime. It's the full-time employees.
That's a full-time. But we're short a captain right now.
Right, but yes and no. We have somebody working in that capacity, so it's not impacting our overtime. If we lost a second person, it would,
And we're temporarily backfilling it with one of the engineers.
yes.
Okay.
So we can spend more time on that if you'd like.
Well, no, I mean,
It's just a figure that's, you know what, no matter what you pick, it's gonna end up changing, because.
It just seems low.
Reserve firefighters, these are our reserves. It went down. And the reason it went down, because when we implemented the safer positions,
Mhm.
we actually have less hours of reserve firefighters working each day. We used to have one reserve working a 24-hour shift and one reserve working a 12-hour shift. We've eliminated the 12-hour shifts. We only have one, because we have 2 people full-time and then 1 reservist on each 20, so we have 3 people, 24 hours a day. So that's why there's a savings in the reserve firefighters.
Yeah.
So that's really our cushion on this whole safer thing, is that 25 grand a year. That's where we're creating a little bit of savings each year during the safer program. These are roll-ups, right? They're just all tied to wages. You see workers' comp's gone up a bit. PERS retirement. It's harder to track and say it goes down, but really it would have went down a lot more because of the UAL, but we brought on 2 additional people with the safer grant, starting in this February. PERS health insurance, same issues we talked about before. We've got a 10% buffer for budget increase for January 1. Don't know what those costs will be.
Plus the 2 safer.
Plus the 2 safer folks, yeah. Let's see, I'm trying to figure out some other items that are notable. Supplies has been difficult to project. That's been up and down too. Repairs and maintenance. This $35,000 are really station repairs, a lot of it. Vehicle O&M. This has been both fuel costs and just wear, maintenance items on the engines. Not low dollar items. Electricity for the station. Water is the district's water bill. Sewer, same thing. Gas. So you remember we had to make a budget adjustment this year when the gas bills shot way up. So we've kept that high, even though the gas prices have gone down, just and I don't know what next winter looks like. Travel, there's more opportunities now than there were a couple years ago for training, physicals. Those are basically new employees, new employee physicals, education, training. Let's see, dues and subscription. These are all, all fairly similar. Here's where you see the allocation of the admin costs. That's what we've talked about previously. This is again, the newest iteration or the version that you blessed in your last meeting. One-time expenses for next year, we've got a C-train that we expect to move from back here to the training facilities. This is concrete
I think it's pads, isn't it?
piers. No, it's to hold
Concrete blocks or something to hold the
the C-train, right?
C train.
Yeah.
Work we're gonna do ourselves. We've got 10 grand in electrical repairs. We talked about some electrical deficiencies here at the station. These are just repairs that's estimated. Roof repairs, same issue we talked about with the admin fund. It's a split cost. This is the roof covers both sides of the building. Here's the engine. So here's what I was gonna mention. This again is the deposit. The engine cost is estimated at about $1.2 million. There's a chance we can get something. They might go up in price by the time we're ready to pull the trigger. We might be able to get a demo or something that's more readily available as well. But this 451 is the chassis deposit from one of the vendors that we have a quote on. I wanted to update the committee on some hopefully good news. We got an invitation from Congressman Panetta back in March to submit a community projects request. We've made a request over the past couple of years to submit and submitted a fire engine to Salute Carbajal. But it never made it out of his office onto the congressional request. Panetta's request has, we're part of a package of 5 projects in his district. And his director from Washington DC contacted me back in March and said, we want to do something for Templeton. He wants to make a name for himself in this area now, because it's a new part of the district. And that's politics. And under normal circumstances, I think there'd be a lot of community optimistic that, hey, we're in there, it's just a matter of time, we should get the funding. And really, I still feel pretty good about that chance. I did speak Wednesday with Mark Denon, that's his ledge director in DC, and said, Mark, you were so helpful getting this forward. How should I feel about where things stand? And he basically says it's a toss up right now. There's so much pressure on this debt ceiling issue, and these what are now labeled community projects used to be called earmarks, and the joke was they were fat, right? Work fat, So we are submitted. If this was last year, I think we'd have a great chance. Mark says temper your expectations, no idea what's going to happen. We might know more though in the next few weeks. Something has to give on the debt ceiling, and we might know more. But nonetheless, we're in. It would be 75% funded from the feds if it passes. I don't know. It might take a while to get the funding, but it would give us certainty.
I think we'll take anything we
Yeah,
can get.
exactly.
So I just feel appreciative that it was
Yeah.
even submitted.
Yeah, well, and
So,
we really, the big change was the congressman said, I want to see something happen from Templeton. So what can you do? We actually submitted originally like 3 things. And he said just one. So we picked the engine and.
well, this would be really something he could tout in this area. If he
Meaningful,
were to secure.
long-lasting, visible.
Yeah, so I think that would give him a lot of community support.
And we're pretty public about our challenges with fire funding. So it's known. Yeah, pretty well known. Okay, so the radios, those were 30 grand, buys you 4 portable radios for fire that are P25 compliant, very expensive. This is like I'll use the term dual band. I don't think that's
What are the radios that you end up to get around like Motorola APX 8000s?
But these are the ones where we can have both fire in EMS and police and sheriff's bands on the
Did you
radio.
write another contract for them or? did you-
I don't know where this quote came from. We'll have when the board meets, the workshop in June, fire chief can answer how the estimates arrived, and I just don't remember where the
I
contract
just
came
got
from.
it back to you.
So we're expecting to have the upstairs bathroom updated.
Yes, this
This fiscal year.
We're working with, we think we might start within about 2 weeks.
Okay, good, that's
good.
that's exciting.
The HVAC system, we talked about that, yeah, anyways, so we got funded replacement, fully funded at $73,000. And when we get to the workshop, we can go over what kind of surpluses we have, and if you want to put more money into that kind of thing.
So one question I have, because I think when we talked about the fire station and some of the needed repairs and service. Electrical was one that I recall being kind of called out as being not up to par with code, and that's really needing to be addressed. Is that something we're gonna be looking at next fiscal
Yeah,
year?
it's in here, that's that 10 grand,
That's the 10 grand?
yes, it says.
Oh, I'm seeing, okay.
Yeah, office, living quarters.
So
electrical
that's
repairs.
not what we need for having the trailer out back. Okay, so that is looking at the building,
Yes,
okay.
we
We haven't gotten any quotes, have we?
Tom's talked to a couple of folks.
Okay,
The problem is, it's one of those things until you tear everything open, you don't
I
really know
know.
what you're doing.
Yeah.
A lot of unknowns.
yeah,
We decided internally that the restroom and the potential mold was the biggest
I
health
agree.
risk. Whatever's wrong with the electrical system, a lot of that's been that way for 25 years. It should be fixed, but it wasn't as
Let's hope it doesn't cause a fire.
current as the mold remediation.
If it does, they're close by.
Yeah.
So
Touche.
bottom line is we bring in, we have revenues exceeding expenditures of about $55,000. That exceeds what the model had shown. And that's,
Or 10-year model.
yeah, the 10-year model had shown. We're
Right.
still on track. We're still gonna have challenges 3-4 years from now. The issue with the engine is, we can spend more time on this on June 6th. There's 3 things, and it's really difficult to prioritize one over the other. You need people. Without the people, it doesn't matter how nice the station the engine is. You need equipment. Without the equipment, it doesn't run, doesn't matter how many people you have.
Yeah.
They both have to be there, and we've limped along. I'm.
Trust me, my first thing, if I win that lottery, first thing is we're getting a new type 1 fire engine.
It's just, we're gonna have to bite the bullet, because
Yeah,
it's
I
not,
mean-
that's not gonna make it 10 more years.
No.
So.
No, I agree.
Okay, so that's that. And by the way, no CFD money coming into this fund yet, this good program.
And we have how much? 34,000?
So that's the next fund,
Oh,
next sheet.
good.
So actually, this goes up a lot. CFD revenue is anticipated to go up to about 62,000. Yeah, because we have the People Self-Help Project coming online.
Okay,
Well,
So,
that's encouraging.
yeah, so you have a cushion here. Because we haven't programmed the CFD funding yet,
Yeah,
and you don't really need to yet.
but
So-
it's growing. I mean,
It's-
that's what's encouraging is
it
to
is.
see that it's growing.
It is.
So,
Again, we're kind of right where the model had thought. I think we'll grow from here
yeah,
as more projects come online. That's not next. We do have some expenses, but
Yeah,
net is about
collected.
50, almost 60 grand. So it's
Now,
jumping.
does this
from-
include the new homes they're building down below here? No, so this is CFD, so this is
What-
annexing,
Which homes?
Gibson, at the end of Gibson and Old County.
Yeah, that will be in the CFD, but it's not, we won't get money until those are
They won't.
complete. So
Yeah.
probably a year or 2 from now.
Okay,
Just starting doesn't generate revenue.
okay. Well,
That's
this is encouraging though, because,
22, so another 25,000.
yeah,
Okay, and then streetlights, we talked about that before. This is, we'll spend a little more time on this than you have in the past, because a couple things have changed here. So streetlights have some interest income. They get a cut of the property taxes. So that percentage hasn't changed in this recommendation. And then we get some revenue from each of the district, each of the 4 areas, lighting and landscape maintenance districts that we have, you'll see that the budget projects increases that are not small, that are from on a percentage basis, not minor. And the reason is that historically, we've not charged an administrative cost allocation to street lighting. And this new cost allocation plan does. And so what we did, what Natalie's done here is we've taken that cost allocation and we've split it between the general, the main street stuff that's 100% property tax paid, and then the lighting and landscape maintenance districts, the lighting districts. We've split that cost. And then we've attributed the split amongst each of the lots that are within lighting and landscape maintenance district. And then we went back to the original formation documents and determined which of those funds could pay that cost, because they all started out with a fixed amount plus a CPI. And every year since, we've always been under that cap. So the cap grows every year, we've assessed a smaller amount. So for 2 of them, we were able to assess the full calculation. Or we're recommending assessing the full allocation, which shows up here. For 2 others, for half of 2 others, is that fair to say? For some of 2 others.
Right.
Some of the lots, because they had a smaller proportional benefit. The assigning we're not able to get the full cost allocation out of them because we hit the cap. So we can't exceed that cap without, again, going back to the voters, probably not gonna ever pass. So, but, so that's all been factored in here. So in July, you'll have a public hearing on streetlight assessments, and these amounts will all be detailed, and we'll send letters. And some customers may come back and say, well, why is it going up so much? And it really is the cost allocation. But
But you can.
it's absolutely, we are having to communicate, we write letters, we have to submit all the stuff to the county property taxes, we have to code all those payments.
Yeah.
It's a lot of work to deal with a property that has that in it. I should say it's a lot of work, it's a few thousand bucks worth.
Well, there's
worth of-
administrative costs.
Over a couple hundred lots, yeah. It's like $30 a lot,
The cost allocation part
Yeah,
is $19.
$19 a lot. Okay, then on the expense side, you got the electricity for general, those are ones that are not in the lighting district that we pay PG&E. And then you have the 4 lighting districts, those are our costs directly to PG&E, and then you have the cost allocation plan. All told, we ended up losing about $2,100 in this fund. And that's just because some of those, the cost allocation plan is a new expense. And some of those districts can't afford to fully pay it. So again, $2,000 isn't, I mean, there's really no reason to panic. But 5 or 10 years from now, you may have to make an ever so slight adjustment to the property tax allocation. All right, Parks and Rec, is it me or is it getting warm in here?
You're talking too much.
We can end now. This is Parks Rec Solid Waste. We merged Solid Waste with Parks and Recreation 3 years ago or so. So grants, we didn't have any that we forecasted in here. Franchise fees, that has been a steadily rising revenue source. Because of rates rising on the refuse rates. We get 10%. So that's 10% of what all customers pay. Program income, the first program, it's gonna be a little tricky here. The first program income is generic. So this covers things like scoot camp, skate camp, concerts in the park, living the dream, any of those programs, that's revenue from that sector. The next one is soccer. We had a kind of a banner year last year, record breaking, and so we didn't want to, we don't, that's sort of cyclical. And so it's programmed to be a little smaller next year. We just expect fewer participants. Basketball about the same, softball about the same, flag football about the same, although it looks like we're gonna end up, like this year, we're gonna end up beating these numbers. We've got the registration's just closed. Rental income for this fund is the community center and the rec center. Both are down. The rec center down, we had the Templeton Community Library book room moved out. We've not been able to restore all of all of that income necessarily. We do have, you know, the preschool in there. We do have some dance in motion or something, whatever, it's Zumba. And we do have some art classes and some tutoring in there. Community center, really COVID, you know, eliminated almost all the users of the community center. They're kind of creeping back. I'm hearing a few more, but it's nowhere like it
Where it
was.
was.
We don't have any churches yet.
We do. No, churches, they never left, some of them,
I
right?
thought, when it was,
One church that was in here,
In here,
burned, he
Burned
left.
left.
yeah, that's what I thought.
But at the community center, we do. I think we have 2 in there now.
Okay,
But the private parties haven't returned to speak of, the baby showers and the wedding showers and the funeral. We specialize in funerals. Those have just not come back.
And it's got the new blinds now too.
Are they up?
Yeah,
Alright.
I heard that.
Gotta go check it out. Anyway, that's an issue. Community center is just it's just not a money maker. It's right now. Because we have some fixed costs there for utilities and appliances that are wearing out or just getting old and those kinds of things. Interest income, same as all the other funds, miscellaneous income, donations, beer run, things like that. Come into miscellaneous income. There's the property taxes, same split. Then we've got the only capital project here that is a asset replacement contribution is a seal. We recommend they're doing seal coat at the community center skate park area and at German Park.
So on salaries, weren't you looking to add a position at Park and Rec?
So we did. We added a part-time parks maintenance.
Part-time, so that's already
It's in
included in here,
Uh-huh.
okay.
We have a little bit of overtime, and then all of these were for Eric's benefit in particular, where it says basketball, soccer, those are all typically very young sports officials for those various activities, you know, referee for basketball, a scorekeeper for basketball, you know, umpires for softball, etc.
all high school kids.
Yeah.
Mostly all high school kids. We do have a couple of old farts in there too.
So why is PERS retirement coming down?
PERS retire, well, you're way ahead of me.
Yeah, I skipped ahead, I skipped
That's the
ahead. There's nothing that jumps out, that one does.
UAL, that's the
ULA,
loss of
yeah.
loss of UL.
So we didn't pay that one down?
No, we did. That's why it went down.
Oh, that's why it went down,
Yes.
okay,
Yes, there's the one time that was used against it.
pay down.
Let's see here. Everything else that's really noteworthy.
Yeah, I'm looking at what's jumping. in.
Supplies, a little higher. Again. I think I want to
Everything
talk about
else
that.
seems like it's in the realm of,
So we do
what we're
have, yeah,
projecting.
we fund a recycling grant. We have some regulars, that's about it. You know, Vineyard Dog Park being one of them. They get a grant each year for compostable mutt mitts and wood chips. We let's see. This year, it's if I back up for a second, we had this tractor in 1998, right? And it's sort of an all-purpose tractor for the district. What we're recommending doing is buying a bigger tractor because we have these needs at the Selby Pond site to do this maintenance out there, which requires pretty deep tines to go in there and keep the soils loose so we can maintain permeability. That's really important for our water wastewater system. When we buy that bigger tractor, it's no longer suitable to drive on turf. It's just too big and heavy and can do damage to the parks. So it's recommended that we buy a small turf tractor like you'd see on a golf course or a park. It's not a mower, we have a mower. It's a tractor for doing things like aeration, dragging of the fields, hauling debris. And we'll spend some time talking about exactly the John Deere tractor has done those things out there, although most of our attachments are in bad shape. We've been trying to borrow equipment from like the school district, and it's somewhat works okay, but then it leads to like, it's only available when they're not gonna use it. And our own team, we just have a limited number of people, and so not having something available to us on short notice does make it more challenging. But both Justin and Melissa really would like to see that this parks tractor be a high priority. And we talked about seal coat German in community center parking lots. We need to make that $32,000 on the front page too, since that price went up. The revenue side,
What do I have?
30. Yeah.
Oh, yeah.
Okay, robotic field painter, this is right now, when we paint field lines, and particularly during soccer season, there's a lot of field lines that are painted both at Evers Park and Belleville Park. It's both a qualitative and a time consuming task. We have a manual paint sprayer. It's an engine, it looks like a lawnmower. It's got like a lawnmower type engine that runs a pump, and it compresses paint and makes lines. Our fields are bumpy, so the lines end up being shaky. And it's time consuming. It's for soccer season, it's most of a day to do to line all the fields each week for about 4 months a year. And then it's less time, but still time each week for softball and flag football.
So will it reduce staff time?
So this robotic system, and it's we'll have a video for the we're gonna take this to Parks and Rec committee next in a couple weeks too. This robotic paint sprayer is it's kind of a new technology. The school districts are all using them. Paso schools, Templeton has had one this past year. It's an audit. You don't have to run it. I mean, you program it and it does itself. One, it'll keep the line straight, and two, staff don't have to babysit it the whole time. They can do other things. They have to be present, but so they can't drive away. But they can be doing other tasks.
Physically not doing the work.
Will it pay for itself? I mean, that's their marketing message. I'm sort of skeptical based on what we pay our folks that we're gonna get a rate of return. I think it's more of a qualitative issue. Melissa we'll talk about that to Parks and Rec committee. We can talk about this in June. If there is a reservation, my reservation is, can we use it? Is it too advanced for our team? We have a lot of challenges in parks maintenance right now. Just the turnover has really been difficult. And we've had difficulty like programming sprinkler clocks and these kinds of things. Melissa's confident we can do it. I'm really waiting for Justin he's gonna go review the Paso Robles, Templeton isn't gonna use theirs anytime soon. Wants to sort of see it in action, understand who has that kind of responsibility. We have pretty inexperienced parks people. These are very entry level jobs. We're paying, below $20 an hour range. And this is a fairly high tech piece of equipment. This $12,000 isn't buying one. This is just an annual lease payment to own it with the paint supplies. It's really like a $75,000 piece of equipment.
So it's just leasing it.
It's just like almost like a rental.
Yeah, and then you're right about the technology. Will the technology be too advanced for the user?
So is the proposal to have the company do the initial configuration?
Yeah, they would do like they've actually come out here and done a demo for Melissa and stuff.
Because if the end user just needs to select which that they need, then that's less training on their end.
Yes, but that's the goal.
And not having to configure it.
Yeah. Melissa's confident that she can take care of the start of the season. It comes with like an iPad, it self-drives, you can drive it up a trailer. There's just a number of things that make it a little trickier about our arrangement than a school. We're at multiple sites, so it's a big device. It's not something you just pick up. It's not like an RC car. It's a
lease, they're maintaining it.
Yeah, it includes a maintenance contract and these kinds of things. I mean, but it's not a low cost. It's not $12,700 one time. It's really for a period of time, and we've isolated it. I think I want to keep it on for now. And by June, even if the board approves it, I'm not gonna proceed with it until I'm 100% certain that we're gonna be able to take advantage of it. It's gonna have a return. Because it's like an egg on your face kind of thing if we end up not being able to
Well,
operate it.
it's a lot of money and
It's a lot of money.
And they're moving around for all the soccer fields, it seems.
He's gonna have to go to 3 sites. It's gonna go from, it'll have to go from Evers to German to the elementary school, because that's where we go. So.
Robotic vacuum.
But
Like a-
it's better than someone pushing a mower. in a sense.
Well, I mean, you know,
Well, they're gonna be straight, is it because?
the line of street. It's a significant qualitative improvement.
No, you just can't drink your beer before you go to the
Yeah.
soccer field.
Parks and Rec would have a funded replacement that's included here and still brings in like 120 grand over expenses. Well, really what,
That's amazing from where.
well, this is really
Well,
solid
the
waste.
admin
This is-
cost. It's
And
the
admin went down
cost.
and solid waste revenues going up.
Yeah, solid waste being included in here and the admin costs going down.
So. I just,
But it also, I think still, it should be noted that it's still relying upon some of the income that comes from the fundraiser that Melissa does.
absolutely. It was
Which is a
$70,000
A
last year.
huge chunk of change, yeah,
So
so,
that, I think that's what she views like this, like she goes, we kicked our butts to make this fundraiser.
Yeah.
The parents that came, that they would see this line sprayer as a notable improvement. She could run, we could line everything, like coaches boxes, we could put sponsors' names on the grass.
Yeah, it was
We could
really
line
cool.
radiuses, circles, I mean, we don't do all that lining right now, because it's
Yeah.
just too labor intensive. You can just turn this thing loose and paint it.
so it could do both soccer and baseball.
Soccer, softball, t-ball, flag football, everything.
And even do logo, the sponsors,
Uh-huh.
that's kind of cool,
I told her she should.
That's
sell
kinda
it in
cool.
spots.
because then you can make some money. off it.
It's pretty cool. We'll have a video for you and things like that. During the
You
workshop,
can generate revenue.
maybe. So, so for any more, I do want to just note something sort of, just to show you where you've been. Because I was looking at the most recent treasurer's report just last week and I said, you know, how much money do we have? 10 years ago, the district had in all funds, all investments, all funds, $13 million. Today, we have $26 million in assets, liquid assets. We've doubled our.
Wow.
Our- you know, so, that's not an invitation to spend it. That's for the
No,
future.
but
That's our security.
No, but there's been some things to do that, I mean, the CFD, also,
Discipline. It's
yeah, it's
discipline.
discipline,
Getting the rates
it's
set
CFD.
properly.
It's also going through what was very painful in terms of the rate increase and some of the impact fees as well. So I think to your credit, some of those things needed to be done. They weren't always received well in the community, but they were very much needed. And could
It's-
be.
well, really, we're down to, you look at all this.
Yeah.
Oh, you know, now we have enough, we have money in these asset replacement accounts in water, sewer, parks and rec to deal with emergencies and deal with problems without stress. The only area we have a challenge right now is the fire asset replacement. Fire operations, that's always gonna be challenging, but fire asset replacement, where we really just can't go replace something that we need. We're just really in much sounder shape. And it just provides security going forward. That's not excess, it's stability
Yeah,
for the future.
well, considering that the district wasn't.
In some places we were.
Yeah, some places, but, yeah, so that's amazing. Yeah,
So were there any, we went through this, we made a couple of super minor corrections, just errors we found, but were there any other, were there any changes that you'd like to have made before this goes to the board or at its workshop? Or
No,
are you
but
ready
you
to see this with, it'll be bolstered, we'll have more information, we'll have the budget like 75% done by June.
so under Park and Rec, you're changing the, but the,
The
still
32.
to 32,000.
The 30 to 32.
Okay.
And then I was gonna change, well, this, I found in the fire fund, and there's a type 1 engine. They transfer in capital cash type 1 engine.
Yeah, okay,
And then the other little thing was one of the account numbers I was gonna change from Oh, and
Supplies, it's
water
supplies.
from 70,000.
Do
61,000.
Okay.
you want the fire overtime though to reflect the potential? Or leave it as where it's at?
You know, I mean, Natalie and I in the fire chief Peterson, we ran some calculations. I mean, you can increase it, it's still not gonna, you know, if we run into a hiccup where we lose a full-time employee. Or something like that, it's gonna blow it out almost no matter what.
So mid-year budget.
Yeah,
Yes.
If you're comfortable with the $58,000, then.
I think it's not a terrible
I
place.
mean, I know it's kind of a
Calls,
thumbnail,
it's
but
gonna-
I just want to make sure, because it's so much lower than what's been
Well-
budgeted in the past.
This past year, we
And-
went on that 14 days of Nevada County, that blows the whole thing up. Because the crew ends up being on overtime virtually the entire time. And we have overtime spilling into both payrolls before and after, because they end up exceeding the hours. Whatever payroll period it touches, it blows up the overtime, and then we have backfilling here, which blows up the overtime, and we get money in. That covers that
Covers
and
that.
more, but,
But it doesn't cover the over.
it does, it's enough.
It does?
Yeah.
Okay.
It's enough. I mean, we
But
get
we're
money
gonna
for the engine, we get 10% admin costs, we get enough revenue to cover it.
And we'd have to do a budget adjustment for the revenue anyways.
Yeah.
We may as well do it for.
So then that's fine. I mean, it's just a placeholder. I mean, it is kind of hard to gauge, because there's all the unknowns, so.
It's very, it's very unpredictable whether we're gonna go on out of county assignments or how many or how long it'll be or to what degree they'll impact us.
Okay,
So,
well, I trust that, whatever you're comfortable with.
Okay, well then that's all we had to review with you today.
That's it?
And we've only been here 2.5 hours. It's actually not that bad.
Not bad, no.
Yes, I have.
On a personal
No, and-
level, I would like to know the cost breakdown on those radios, as I was going over my quote.
$7,500 each.
Yeah, there's like 4 of them.
It's only 4.
We're at 75.
Yeah.
You give me something. You buying some of the same things, these.
APX 8,000, APX 9,000, APX 8, 7s and 6, depending.
What are they,
on-
these are dual channel, these.
Dual channel, 700 megahertz minused out, some have encryption, some have channel encryption.
And you're getting it cheaper?
No, we're getting it about that same price.
Same
A
price?
little bit because we worked off LA County for their open contract. So it was kind of interesting, but you are right, about 7,500 each radio. But
It's expensive.
yeah, so they probably are running APX 8,000.
It's expensive.
Please.
We did find cheaper when we actually went out for radios. Kenwood supplied some radios. One of the biggest issues with firefighters is that they have radios that are sufficiently rated for going out into a active fire. And so even though lapel mics have to